Okay. So friends, see, we were discussing our perquisites. In perquisites, we have completed till clause number 5. Okay. Clause number 5, everything is done. So today we are going to do 17 subsection 2, clause 6. In this clause, they are saying that we have to determine the value of, not the value, we are supposed to say that sweat equity shares or securities which are issued under ESOP, ESOPs. ESOPs you must have heard, employee stock option plan, okay? Or it can be sweat equity shares also. So either the sweat equity shares or the ESOPs. Under the ESOPs, securities. So the employer will give this to the employee. So employee is going to get these type of shares and securities, and these type of shares and securities the employee will get either free of cost or at concessional rates. So because of this also there is a personal benefit happening to the employee, and that personal benefit, my dear friends, will be taxable under the head income from salary in the hands of this employee as a perquisite. That is what clause number 6 is telling you. So whatever sweat equity shares or securities which are issued under ESOP given by the employer to the employee, either they will be given free of cost or it will be given at a concessional rate. So because of that, there will be a personal benefit happening to the employee, and that personal benefit will be taxable in the hands of employee. Now what will be the taxable value? What will be the taxable value of this perquisite? Okay. So to determine the taxable value, they have said that you have to determine the value of these shares, fair market value of these shares which are given to the employee. So it will be fair market value of the shares or the securities, and this fair market value has to be taken as on the date of exercise of option. DOEOO means date of exercise of option minus amount recovery from employee, if any. This recovery is also known as exercise price. So if you take the fair market value, you reduce the exercise price, whatever balance will remain, that balance will be the taxable value of this perquisite. Okay. So wait, pay attention over here. What will happen now? See, whenever there is an employee working in the organization, some big company is there. Okay. So if that employee is working really hard, he's putting all his efforts for the employer. Okay. So in that particular scenario, what happens? That employer wants to reward him for his, extra efforts which he is putting on. Then some targets would be given to him, or few conditions might be put by the employer that if you satisfy this conditions, the employer will become happy and employer will give you some shares for free or maybe for concessional rate. So being an employee, if you are working so hard, just imagine if you are made the owner, you are made the shareholder of the company, you will be working more hard. Yes. So the employer will always offer these shares or these type of securities based on the satisfaction of certain conditions. If these conditions are being satisfied by the employee, he becomes eligible, he becomes fit to get these shares or securities from the employer. So for example, you are one of those employees who have satisfied the conditions given by the company. See, conditions can be any conditions. It depends on the company that based on what conditions the company wants to give you what these type of shares. Maybe it can be target based conditions, that if you achieve this much target, maybe the employer wanted you to stay in the company for some long time, for 5 years, 10 years down the line. So if you satisfy all such conditions which are, specified by the employer, on satisfying this condition you become eligible, then an option comes in your hands. This option is not given to all the employees. This option is given to those employees who have fulfilled certain conditions prescribed by the employer. Now, once you satisfy that condition, the employer is saying that now we are giving you an option to buy 1000 shares of the company at a predetermined price of 100 per share. Meaning that you satisfied those conditions. Now you are getting the option from the company that you want, then you exercise this option, and by exercising this option, you will be required to pay only 100 rupees per share, and you can buy one share of the company. Like 1000 shares you can buy. The option to buy how many shares? 1000 shares. This option is given to you. And whenever you will exercise this option, you will have to give only 100 rupees per share to the company, and the company will issue the share to you. Now, whatever may be the value of those shares in the market, you are not supposed to pay that value to us. You are supposed to give only 100 rupees when you exercise this option, and the company will allot you the shares. Now, just imagine if the value per share in the market was 1500 rupees per share. That 1500 worth of share you are getting only for 100. Why? Because you got this option from the company by satisfying that conditions put by the company. So you are paying only 100 for a share which is worth 1500. So isn't it a 1400 rupees benefit per share? And what if you exercise the option for all the 1000 shares for which the option was given? Yes or no? That means 1000 multiplied by 1400, 14 lakh rupees of benefit company can give you like this. Just imagine if instead of paying you 14 lakh rupees of salary, the company can give you 14 lakh rupees of salary like this also. So the government is saying, boss, hello, 14 lakh rupees amount is not coming to you right now, but still 14 lakh worth of benefit is given by the employer, no? See, that 14 lakh will be realized to you when you will be selling those shares. But we don't want to charge the amount when you will be selling these shares. God knows when are you going to sell these shares. Getting my point? But right now when these shares are given to you, that time 14 lakh rupees benefit happening to you, that 14 lakh we want to charge under the head salary itself right now only. But that is possible only if we make this amount as your perquisite. Later on, when you will sell these shares and this 14 lakh will come in your hands as a benefit, as a capital gain, that time it will not be taxed again. But right now this 14 lakh will be taxable for you. Getting my point? But to calculate this 14 lakhs, what was done? We took the fair market value of the shares. See, when you satisfy those conditions, no, then there will be an option given. So what was the option given by the employer? For example, 1000 shares of the company you can buy at a predetermined price of 100 per share. Now to exercise this option also, that some time will be given to you. For example, if your employer is giving you that, see, you are getting the option today, within 1 year you are supposed to exercise this option, or within the next 2 years you are supposed to exercise this option, meaning that this is the option exercising time. So within this time if you exercise the option, then it is okay, and if this time goes away, then the option will also go away. So decide within this time whether you want to buy or not. If you want to buy, then you have to buy within this time, within the time in which the option has to be exercised. So for example, 1000 shares were given, 1000 shares option was given, and you exercised the option within the given time. You are exercising the option. You are now supposed to check the date on which you are exercising the option. This date is very important, because as on this date only, the fair market value of the shares will be determined. Now, how to determine this fair market value? As per rule 3.8 and rule 3.9. But don't worry, you will not be asked to determine this value, because see, what if the shares were unlisted? How to determine this fair market value? What if these shares were listed? How to determine that value? What if these shares are listed, but listed in more than one stock exchanges? Then how to determine the value? What if the shares are listed, but as on the date on which the option is exercised, as on that date, there was no trading in the stock exchange for these type of shares? Then how the fair market value will be determined? Every such possible thing is given in Rule 38, Rule 39. And based on the rules prescribed, you are supposed to determine this fair market value. But this fair market value will be determined as on the date of exercise of option. You will not be asked that, come on, tell us how to determine this fair market value. Getting my point? They will definitely give this value in the question itself. Okay, you're just supposed to pick up this value, fair market value. As on which date? As on the date of exercise of option. Pick up this value. This is the shares for which you are exercising the option. So as on the date on which you are exercising the option, the shares are worth this much. Now against this shares, how much is taken from you? If the shares are given free of cost, then nil. But if the employer is taking 100 rupees from you, so that 100 you reduce out of this fair market value. Now tell me how much is the benefit. 1500 minus 100 will be 1400. And this 1400 will be multiplied by number of shares for which the option was given. No, for which the option was exercised. Yes, because it is not necessary that all the 1000 shares you are going to buy right now only. Out of 1000 shares you are buying only 600 shares. So multiplied by 600 shares. For these 600 shares you are getting this benefit. So what about those 400 shares options, sir? Whenever you will exercise, that time again this perquisite will be valued. And for those 400 shares, a separate benefit will be calculated. And that time it will be taxable. Getting my point? Everyone. So what you are doing? This is the taxable value. Now this value, taxable value of perquisite, this amount will be taxable, and this will be taxable in the previous year in which option is exercised. The answer is no. It will be taxable in the previous year in which shares are allotted. So now there will be one more date which will be given in the question. Date of allotment of shares. So whenever that date comes, for example, that date is coming in previous year 24-25. Option is also exercised in 24-25. So the value will be taxable in 24-25. But what if the option is exercised in 24-25 but the shares are allotted in 25-26? The value will not be taxable in this year. Value will be taxable in the year in which the shares are allotted, because till the time the shares are not given to you, not registered on your name, not allotted to you, till that time you are not going to get this benefit. So this benefit will become yours only if the shares are allotted to you. So now you are supposed to see that when the shares are allotted. For example, if I say that the date of exercise of option was 15th of September 2024. So fair market value as on 15th September 24 you will take always. To find out the value of the perquisite, the fair market value as on 15th September you will take always. Yes or no? But now these shares are allotted. The date of allotment is also given. The date of allotment was given 10th of October 2024. So can I say the shares are allotted in the shares option is exercised in 24-25 and shares are also allotted in 24-25. So whatever value which you will calculate, no, right now, this value will be taxable based on this date. This date is coming in 24-25. So the taxable value will be taxed under the head salary in 24-25. But what if, I'll change the dates a little bit. Come on. What if the option was exercised on 27th of March 2025? That means in the previous year 24-25 the option was exercised. So I will have to take the fair market value as on 27th March only. Hello? But these shares were allotted to you on 15th of April 2025, meaning in the previous year 25-26. Now tell me, when the value will be taxable this year or next year? Next year. 24, 25? No, 25, 26. Because the shares are allotted in 25, 26. Now what they will do, they will give you the fair market value as on date of allotment also. So to value the perquisite, will you take this fair market value? You have to ignore this fair market value. The valuation will be done based on the fair market value prevailing as on the date of exercise of option. But the value which you have calculated will be taxable based on the date of allotment. So date of exercise of option becomes relevant for the purpose of valuation. Okay. And the date of allotment will become relevant for the purpose of taxability. Done? This is the end of this perquisite. Clause 6 over. Now we'll see one question, that how to solve this question. But wait, I will give you first example, then we'll solve that question. See, employer gave one option. Employer gave option to acquire 1000 shares at rupees 500 per share. Okay. Now this option was given to the employee, and employee exercised the option to buy all 1000 shares. Let's say option to buy 1000 shares was given. He is exercising the option to buy all the 1000 shares. Yes or no? Option to buy 1000 shares on 19th of July 2024. And the date on which the option is exercised, as on this date, the fair market value of the shares was given let's take it 1200 rupees per share. And the shares, these 1000 shares were allotted on 19th of September 2024. Possible? Now this kind of, all this information will be given in the question. From the question only you are supposed to take up this information. Now based on this, they are telling you to calculate the taxable value of perquisite and when that perquisite will be taxable. So very simple. Perquisite will be under section 17 subsection 2 clause 6, and this perquisite will be calculated by taking the fair market value as on the date of exercise of option. So this was the date of exercise of option and the fair market value is also given. Okay. So what was the fair market value? As on date of exercise of option, which is 19th of July 2024. Yes or no? The fair market value was 1200 per share. Now for each share, the employer is recovering how much from you? Please check. 500 he is recovering. So 1200 worth of share given to you for how much? 500 only. So less what you will do here? Less exercise price. This is nothing but the amount recovered from the employee. He will exercise the option and he will give how much price to the employer? 500. Yes or no? So 500 per share. Reduce that. How much you will get? 700 per share. This is the benefit. So how many shares like this you are going to buy now? 1000 shares. Option was given for 1000 shares. You exercised the option for all the 1000 shares. So multiplied by 1000 shares, you will get a benefit of rupees 7 lakhs, and this will be taxable under the head income from salary, and it will be taxable in the previous year 24-25 itself. Why? Because the allotment was done on 19th of September 2024. See, this is the date of allotment. The date on which it is allotted, on that date in that previous year, this will be taxable. Done? Understood, no? Now, what if these shares which you bought right now from the company allotted these shares to you right now. Now, if the above shares are later on sold means transferred by employee. So what are you selling, guys? You are selling the shares. You are selling the shares. Shares which you are having no right now. Now these shares are your assets, meaning it is a capital asset. So if these shares are your capital asset now and you are transferring the capital asset, so now the capital gain will also arise. So whenever later you will sell these shares, that time your capital gain will be calculated. Now for example, these shares are sold or transferred. These shares are sold or transferred for some amount. For example, they are sold for rupees 2000 per share. So whenever they will be sold for 2000 per share, that time the capital gain will be calculated. Now let's calculate the capital gain. Okay. So to calculate the capital gain, what are you going to take? You are going to take the sale price of the shares minus the cost price of the shares. You will get the capital gain. So to calculate the capital gain, what you need? You need the sale price of the asset minus the cost of the asset. Yes or no? How much you are getting by selling the asset and how much the asset costed you when you acquired that asset. So how much selling price you are getting, guys? 2000 rupees per share. Hello? And what was the cost of these shares to you? How much you gave to the company to buy the shares? 500 rupees. So if you reduce 500 rupees cost over here, so there will be 1500 rupees per share, and this will be your capital gain will be taxable to you. Now if you are doing this, no, wait, if you are doing this, there is a blunder which is going on. What blunder is happening, you know? 2000 rupees, you are selling the shares and you are saying that you bought the shares for 500, meaning 1500 rupees gain is happening. But don't you think that out of that 1500 rupees of gain which is happening to you, you have already charged 700 rupees of gain under the head salary in the form of what? Perquisite. This 700 is counted second time in this 1500. Meaning that if you don't consider that 700 here, then that 700 will be again taxed as your capital gain, which already got taxed in the form of what? In the form of salary. So should that amount be again taxed in the form of capital gain? No. So make that 700 also as your cost. So your cost will not be 1500, cost will be 1500 plus 700 already taxed under the head salary. That is nothing but 1200. And what was that 1200? The fair market value as on the date of exercise of option. Take that fair market value as the cost of these shares to calculate the capital gains. If you will take the actual cost, no. If you will take the actual cost, what will happen in that 1500, the 700 rupees per share, which was already taxed. What did I say? Which was already taxed as what? Income from salary is again taxed as what? Capital gain. If you don't want this thing to happen, so you revise your capital gain calculation. Capital gain calculation will be done as sale price minus cost. So now as per 49(2)(a), the cost of these shares will not be the actual cost which you have paid. It will not be 500. As per 49(2)(a), the cost of these shares to calculate the capital gain in future will be its fair market value as on the date of exercise of option, which you considered to calculate what? Perquisite. So selling price was 2000 per share. Out of that, you are not supposed to reduce 500. Actual cost. No, no, no. If you are doing that, you are charging that 700 again as capital gain. So take what 49(2) says that the fair market value which you took to calculate your perquisite taxable value, yes or no? That fair market value as on the date of exercise of option will now be treated as cost to calculate the capital gain. So what was that amount? That was 1200 per share, meaning that this 1200 covers your 500 cost also, and this 1200 covers that 700 rupees of perquisite also, which already got taxed in your hands. Both the amounts will be covered in this 1200. Yes or no? Reduce this and now see how much is the profit. 800 rupees per share will be your profit, multiplied by number of shares which you have sold now. So out of 1000 shares, for these 1000 shares, per share benefit will be 800 only. But now you are supposed to see that how many shares you are selling right now. For example, you are selling all the 1000 shares. So benefit is 800 into 1000, 8 lakh rupees of benefit. Getting my point? 2000 you are selling, you bought for 500, 1500 gain. Out of 1500 gain, 700 already taxed in the form of perquisite. So now how much should be taxed as capital gain? Only 800. 700 plus 800, 1500. Got it? That 700 which got taxed earlier will not be taxed again in the form of capital gain. Done. This 49(2) will again come in front of you when we'll be doing capital gains. That time I will tell you that we have already done this part. Will you be able to recollect that time? Let's see. We hope. Okay. So let's solve one question. Okay. (22) AB Company Limited allotted 1000 sweat equity shares to Sri Chand in June 2024. See, June 24, the shares were allotted, meaning the allotment done in my previous year, 24-25. Now, the shares were allotted at 200 per share as against the fair market value of 300 per share on the date of exercise of option. See, the date of exercise of option would be some other date. As on that date of exercise of option, the fair market value per share was how much? 300, and these were given to you for how much? Only 200. So exercise price was 200. The fair market value was computed in accordance with the method prescribed under this act. Very good. You have calculated as per the method prescribed and given it to us. So we'll be using that 300 only. Okay. So what we are going to do? We are supposed to take 300 per share, no? 300 per share minus 200 the exercise price. So total will be 100 per share. This 100 per share will be your benefit. Multiplied by how many shares? 1000 shares. You are going to get 1 lakh rupees as the perquisite. What is the perquisite value? Sir, 1 lakh is the perquisite value. Yes or no? And when this 1 lakh will be taxable? This will be taxable in the previous year 24-25, because these shares are allotted to you in June 2024. That is previous year 24-25. So this 1 lakh will be taxable in previous year 24-25. Getting my point, everyone? Now, in the case of subsequent sale of these shares by Sri Chand, what would be the cost of acquisition? So you are supposed to write down to determine the cost. The cost of acquisition will not be equal to actual cost, that is 200 into 1000 equal to 2 lakhs. You are not supposed to take this 2 lakhs. Here in case of such type of shares, 49(2) is applicable, and as per 49(2) the fair market value as on the date of exercise of option, which was how much? 300 multiplied by 1000 shares, rupees 3 lakhs. This will be treated as the cost of acquisition. So whenever in future these shares will be sold, to calculate the capital gain of these shares, 2 lakh actual cost will not be reduced, 3 lakh the fair market value will be reduced, so that this 1 lakh does not get taxed again in the form of capital gain. Got it? So this was the answer. This will be given here. Okay. So now let's move on to the other perquisites. We are through till clause number 6. Now one by one I will keep on asking you. You are going to tell me. First, clause 1 and clause 2, accommodation, rent free as well as concessional, done. Clause 3, 5 perquisites were there. Motor car facility, domestic servant provided, gas, water, electricity provided, 4 educational facility, and 5 free or concessional tickets provided by employer in transport sector to its employees other than Indian Railways and Airlines. Right? So that was the fifth benefit in clause number 3. Then clause number 4. Clause number 4 was obligation or the liability of the employee. Any obligation, any liability of the employee paid by the employer. There was one exception, that if the income tax liability on the non-monetary perquisites of the employee paid by the employer, that will not be treated as perquisite taxable under clause 4, that will be fully exempt under section 1010(c), for which we had a discussion also in the last lecture. Okay. Then clause number 5. What was there in clause number 5, friends? Clause number 5, any amount payable by the employer to effect the life insurance policy or annuity policy of the employee, meaning the premium of life insurance policy, premium of annuity policy payable by the employer during the year will be taxable as perquisite in the hands of employee. But other amounts payable by the employer will not be treated as employee's perquisite in clause number 5. Only the premium payable on life insurance policy and annuity policy will be treated as perquisite in the hands of employee. Done. Then sixth perquisite, sweat equity shares, clause number 6, sweat equity shares or securities issued under ESOP, whether issued free of cost or issued at concessional rate, will be a benefit, will be taxable in the hands of employee. And how the valuation should be done, we have already seen. When that value will be taxable, we have already seen. What will be the cost of these shares when the shares will be sold in the future, we have already seen. Okay. Now there will be 17 subsection 2 clause 7 and clause 7a. These two benefits shall be covered along with the concept of approved superannuation fund. Later on, when I'm going to do provident fund concept, that time I will be discussing approved superannuation fund concept. Along with that ASAF concept, now I'm going to discuss these two perquisites. So right now we are keeping these perquisites in pending. Okay. In this chapter itself, in the end, we are going to discuss ASAF. With ASAF, we are going to discuss these 2 points. Don't worry about it. Okay. Next one. Now I'm going to 17 subsection 2 clause 8. Now see, clause 8 says that value of certain notified benefits, facilities, amenities, services, privilege, etc. It can be by any name. It can be a service, it can be a privilege, it can be amenity, it can be facility, it can be benefit, it can be anyone. But they must be first notified. So which are the benefits, facilities notified for clause 8? So number 1 will be interest benefit. Number 2 will be traveling, touring and accommodation. Traveling, touring and accommodation. Then there will be food, meaning meals provided. Then there will be gifts provided by the employer. Then after gifts, there will be credit card facility. Then after that, there will be club facility. See, as and when government coming to know that, okay, this type of benefit is also given by the employer to the employee. So the government notifies those benefits in clause number 8. So first they came to know that the employer is giving benefit in the form of what? Interest benefit. Interest benefit notified. Now this will also be your perquisite. Its value will also be taxable. Then again they came to know, okay, not just interest benefit, the employer is giving benefit in the form of traveling, touring and accommodation facility also. So they notified the traveling, touring and accommodation also. Then the employer came to know, oh my God, the employer is giving benefit in the form of providing meals, providing food to the employees. Employer is providing food to the employees. Yes or no? So by providing food also the benefit is given. By providing gifts, by providing credit card facility, club facility. Sometimes the benefit is given by providing the use of movable assets. Sometimes it can be by way of transfer of movable asset. Now they got tired by notifying. Every time they came to know that, okay, this can be a benefit, this is also a benefit given by few employers to the employee. So let us notify this benefit also. Let us notify this benefit also. One by one they are notifying. One by one they are notifying as and when they are coming to know. As and when the government is coming to know that, okay, this benefit is also given, this benefit is also given. So now just imagine notifying each and every benefit given by the employer to the employee. There might be chances that few more benefits are given by the employer to the employee, which can skip our attention. And likewise, how many benefits we are going to notify? Until when we are going to notify all these benefits one by one, one by one, one by one, still there will be something which would remain, which we would not be able to charge. So what to do? What to do? What to do? We have to cover all the other benefits which we have not yet identified, but all should be covered. So they finally notified what? All other benefits, facilities, amenities, service, privileges, etc. to the employee. This is the last and residuary category. This will cover all the other benefits. Even if we have not notified, that will be covered here. So now we are notifying the last category. This will take care of everything. Getting my point? Now, the value of each such benefit you are supposed to calculate. Value of each such benefit you are supposed to calculate. And this value will be calculated as per rule 3 sub rule 7. As per this rule, the value of all these benefits will be calculated. And that value will now be taxable in your hands under the head salary. Getting my point? Hello, sir. So first the value will be determined as per rule 3 sub rule 7. And now that benefit which you have valued as per this rule for these benefits, yes or no, will be chargeable under the head salary. Done? So one by one we are going to learn the valuation of all these perquisites. But wait, we are supposed to learn the valuation only for interest benefit, food, gifts, use of movable asset and transfer of movable asset. Rest all the taxable value will be given in the question. You will be said that, okay, credit card facility is given by the employer amounting to this much. The amount will be directly given in the question. Pick up that amount, show it taxable. No need to do the valuation also. Traveling, touring and accommodation facility, this much is the benefit. fully taxable. Pick up that amount and show it under the salary head. You will not be bothered only to determine the value. Getting my point, everyone? Sure. So we will learn the valuation only for those things which I have marked. Rest other values are taxable. You are supposed to remember these are taxable. But we have not to determine the value. We are not to determine the value. That value will be determined by them only and they will be giving that value in the question. Done? So the first benefit is what? Interest benefit. Come on. In clause number 8, 17 subsection 2, clause number 8. This clause says that interest free or concessional loans, if the employer is giving interest free or concessional loans to the employee. So as a result of this, there will be savings in interest happening to the employee. So if the employee would have gone to a bank to get this loan, then the rate of interest for this loan was 12%, example. And the employer is giving that same loan without interest. Entire 12% interest you have saved. Yes or no? Or the employer might give you the loan at 6% only. Still 6% you are saving. The savings in the interest happening to you on this loan, no. Even that is treated as your perquisite as per clause 8. So because of this interest free or concessional loan, there will be savings in what? Interest. Also known as interest benefit. That interest benefit will be taxable in your hands. This is also a personal benefit. This is also a personal benefit in the hands of the employee, and the value of this will be taxable under the head income from salary as per perquisite. But what will be the taxable value? Value means TVOP. So now the TVOP calculation will be happening like this. Pay attention. You are supposed to take loan amount outstanding as on the last day of each month of the previous year. Yes or no? So during each month of the previous year, how much loan you have taken from the employer, out of that, how much loan is remaining outstanding as on the last day of each month, because the benefit will be calculated on a monthly basis. Why monthly basis, sir? Because the moment you have taken the loan from the employer, you are going to repay that loan also, no? So every month end, the amount of loan will keep on changing if monthly payments are there. Getting my point? So we have to check the loan amount outstanding, the loan which you have taken from the employer. Out of that loan, how much loan is outstanding as on the last day of each month of the previous year. On this loan, how much interest you should have given to the bank, reasonable interest you was there, minus how much interest you are actually giving to the employer. The difference will be your interest savings only, no? Interest benefit only, no? That will be taxable. So applying that two different rates on the same amount and calculating two interest and then calculating, the benefit, I will take out the difference between two rates only and apply that difference. That is nothing but interest benefit. That difference I will apply on this loan. Getting my point? So what I will do, multiplied by reasonable rate of interest minus actual rate of interest, and this again multiplied by 1 by 12. Why 1 by 12? Because the rates of interest will be given per annum. So the interest benefit which you will calculate will be for per annum, but we are not going to charge this per annum amount. We have to calculate for 1 month, no? So whatever interest benefit was there, multiplied by 1, divide by 12, you will get the interest benefit for 1 month. Done, sir? Now this loan amount outstanding loan as on the last day of each month you are supposed to take, and reasonable rate of interest you are supposed to take. That if this loan was taken, not taken from the employer, it was taken from any bank. So how much the rate of interest on the same loan the bank would have charged? For example, for your child's education, you wanted a loan. Your child want to go to US for studies. So you did not have money. So you asked the bank that bank give me loan, education loan for my child. So bank said that we will give you loan at 12% rate. But that same loan you are taking from your employer, and employer is not charging any interest. So what is the actual rate? 0. So entire interest which you were supposed to pay to that bank, 12%, you saved that, no? 12 minus 0 will be 12% savings on that loan. Or for example, the employer is charging only 6%. So 12 minus 6, 6% you are saving on this loan, no? And that rate will be what? Per annum rate. So 6% whatever you are saving is what? Per annum benefit. Multiplied by 1, divided by 12, you will get per month benefit. Likewise, for every month you are supposed to calculate the benefit, and total for all the months, what you will get? You will get interest benefit for the full year, that will be taxable under the head salary. Now wait, no need to do this calculation 12 times. If the loan amount is not repaid monthly, it is paid yearly. What if the loan is repaid once every year? So every month end, the loan amount will be same, outstanding. Hello? The interest benefit is same into 1 by 12. Every month the same interest benefit will be there, no? So in spite of making the same calculation 12 times, calculate the interest benefit for 12 months together. Then in that case, don't multiply it by 1 and divide by 12. Hello, sir? But what if every month the repayment is happening? Every month the loan amount will keep on changing. So every month you will have to do this calculation. Getting my point? So now I will take one example. With that example you will understand. Okay? Sure? Wait. For example, if I say education loan. Education loan was taken amounting to rupees 10 lakhs, and this loan was taken on 1st of July 2024 from employer at 6% per annum rate. Now, are you having any interest benefit? In this case, come on, tell me. Are you having any interest benefit? In order to find out that whether because of this loan interest benefit is happening or not, you will have to check what was the rate of interest in the bank for the same type of loan. Hello? Which bank? You went to HDFC Bank. You asked HDFC Bank that HDFC Bank, I want to take an education loan of 10 lakh for my son. How much will be the rate of interest? HDFC Bank says it is 12.8%. You said okay. Just besides HDFC Bank, ICICI Bank was also there. So you went to ICICI Bank. You asked ICICI Bank, how much rate of interest you will charge for education loan? I want 10 lakh rupees of education loan. ICICI Bank is saying we will charge 12.5%. Oh my God, 3.3% lower than HDFC. So what you did now? Let's check in Punjab National Bank. Let's check in Bank of India. Let's check out in SBI. Let's check out how many banks are there. There are many banks. But all the banks will not give you the same rate of interest. Every bank will give different rate of interest. So, which bank we are supposed to take as benchmark? So do one thing, take the rate for all the banks, add and take the average. No need to do that. Any one bank out of all these banks. And which bank the government would rely on? Always SBI, because it is a government bank. So if you would have gone to SBI to take the same educational loan, the rate of interest which SBI would have charged on this loan, that is the reasonable rate of interest. So this reasonable rate of interest, what you will take here? You will always take SBI's prime lending rate. PLR means prime lending rate of same loan as on 1st April of the previous year. So you are supposed to take the relevant previous year. Whatever is the relevant previous year, as on the first day of that relevant previous year, what was the SBI's prime lending rate for this type of loan? That is the standard, that is the reasonable rate which you should have paid. Now check, compare that with this actual rate. So in your question also they will give you that how much is the SBI's prime lending rate for such type of loan, yes or no? So now you have to compare that SBI's rate with this 6%. So SBI's rate should be higher, no? And this should be lower, only then there is an interest benefit, no? What if SBI's rate is lower as compared to 6%? Then there is no interest benefit, no need to calculate also. Getting my point? So for example, if on this educational loan, SBI's prime lending rate as on 1st April 2024 was 12% per annum. That means you are saving 6% interest every month. Now tell me, if nothing is mentioned in the question that this loan is being repaid, the interest benefit for the full year will be calculated only once, because no repayment details are given. Meaning that this loan is outstanding throughout the year. Every month end, the same amount of loan will be outstanding. So how much interest benefit? Come on, tell me. On 10 lakh, 12 minus 6, 6% interest benefit happening. So on 10 lakh, calculate this 6%. It will be how much? 60,000. But 60,000 is the benefit for full year. You have taken the loan on 1st July 24. So interest you will start paying from April or from July. So interest benefit will happen from July only, no? April, May, June, no loan taken, so no interest benefit. Loan taken from 1st July, so interest benefit will start from 1st July. But every month the interest benefit will be same. Why? Because there is no repayment, so the loan amount outstanding every month will remain same. 10 lakh, 10 lakh, 10 lakh, 10 lakh, into 6%, into 6%, into 6%, into 1 by 12, into 1 by 12. Will you do the same calculation 9 times? Or the calculation for 9 months together? Definitely. So 10 lakh into 6%, how did you get 6%? 12 minus 6 will be 6%. Into 9 upon 12, it will give you 45,000. 45,000 interest benefit. Hello? Easy or no? Wait now. They will make your life a little bit difficult by giving 1 or 2 more informations. What information they will give you now? That this education loan repayment will be 50,000 per month. Per month 50,000 repayment will be done on 7th of each month, and this will start from Jan 25 onwards. So now what will happen? Come on, tell me. July, August, September, October, November, December, 6 months. The loan amount outstanding will remain same, 10 lakhs. 6% interest benefit into 1 by 12. So why are you calculating this for 6 months differently? Calculate for 6 months together. So it will be 30,000 now. 10 lakh into 6% into 6 months. But tell me, can I say for the month of January, February and March, the loan amount outstanding as on the last day of these months will change? Because every month 7th, I am repaying 50,000 interest. So can I say January, I have repaid 50,000 on 7th January. So 9 lakh 50 will be the loan amount outstanding as on 31st January, last day of January. Yes or no? So for January, the interest benefit will not be calculated on 10 lakh, it will be calculated on 9 lakh 50. That will be 4750. For February month, again on 7th, 50,000 will be repaid. So the loan amount outstanding will be 9 lakh into 6% into 1 by 12, it will be 4,500. And for March, it will be 4250. Please check. Got it? So now 30,000 for first 6 months, 5,000, 5,000, 5,000, 5,000 each month. Then starting from January, 4750, 4500 and 4250. Add all these amounts. How much you are getting? 42,500. 30,000 plus 4750. 47,500 you are getting? 43,500. Okay, 43,500. That 43,500 will be taxable. How did you calculate? Come on, please help me to calculate. Previous year 24-25, April to June. For these 3 months, since there is no loan, therefore no interest benefit. So interest benefit taxable will be nil. Starting from July, I have now taken the loan in the month of July. July last day, the loan outstanding is 10 lakh. August last day, the loan outstanding is 10 lakh. September last day, the loan outstanding is 10 lakh. This will remain outstanding till 10th, till December. Because from January, the repayment is starting. So can I say July to December is how many months? 6 months. The loan amount outstanding will be 10 lakh. On that 10 lakh, 12 minus 6, 6% will be my interest savings for these 6 months. That will be 30,000. This will be the interest benefit for these 6 months of my previous year. If you calculate into 1 by 12, you will get 5,000, 5,000, 5,000, 5,000 every month. So why are you calculating 5,000 every month? Calculate for these 6 months together, no? Done. Next one, Jan. What is the loan amount outstanding as on last day of Jan? Because on 7th of January, 50,000 will be repaid. So as on the last day of January, the loan amount outstanding will be 9 lakh 50 into 12 minus 6% into 1 by 12. It will be 4750. February, again 7th February, 50,000 will be repaid. So as on the last day of February, 9 lakh will remain into 12 minus 6% into 1 by 12. This will be 4,500. And March, 7th March, again 50,000 will be repaid. Yes or no? So 7th March, 50,000 repaid. As on 31st March, the loan amount outstanding will be 8 lakh 50. 12 minus 6% into 1 by 12. This will be 4250. And now the total will be 43,500. This is the taxable value of your perquisite. Will you be able to calculate like this, everyone? Easy, no? Now see, two important things you are supposed to remember. If aggregate amount of loan taken from employer does not exceed 20,000 rupees. I am talking about loan taken. So you are an employee, you are taking a loan from the employer. Either you are taking one loan or you are taking 10 loans from your employer. Aggregate amount of the loans taken by you from your employer should not be more than 20,000. It should be 20,000 or less. So on this loan, which was 20,000 or less, even if interest benefit is there, still it will be a very small amount only, no? Just imagine loan is only 20. So interest benefit on that loan will be peanuts. I must say it will be less than peanuts also. Very small amount, very small amount. So the government is not interested in charging tax on that amount, which is very, very, very less. And definitely, if the loan amount itself is not more than 20,000, so interest benefit is going to come less only, no? Government is saying, even if there is some interest benefit, but which will be very less amount, very less amount. So that entire interest benefit will be fully exempt. So the taxable value of perquisite here will be nil, friends. Will you remember? Sure. So this you are supposed to keep in mind. Sir, what if I am taking 3 loans from my employer, every loan 20, 20, 20. None of the loan is more than 20. That is the reason why they have used the word aggregate. Even if single loan is not more than 20, no. If the total of all the loans is also more than 20, still there will be interest benefit on the entire loan amount now. Not the loan amount in excess of 20. No, 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 no. Now on the entire loan amount, interest benefit will be calculated and it will be taxable. So 20, 20, 20. How much loan? 60, no? On that entire 60, interest benefit will be calculated and will be charged to tax. But what if first loan, second loan, third loan, all the loan taken together, the total amount is 20,000 or less, no interest benefit. Only one loan taken during the year, only one loan. And the amount of that loan is 20,000 or less, no interest benefit. Understanding? If single loan amount is more than 20 or multiple loan taken together, the total amount is more than 20, then only go and calculate the interest benefit. Will you remember? Now, wait, one more thing. If the loan taken from employer can be of any amount. Now, no limit, huh? Now any amount. And this loan is taken for treatment. Treatment of what? Specified disease. The diseases which are specified in Rule 3A. So there are certain diseases which are prescribed or specified in Rule 3A of the income tax rules. So you are supposed to go to income tax rules, go to Rule 3A, you will find out many names of diseases. All those diseases are specified diseases. Dangerous diseases. Huh? Cancer is there, leukemia is there, AIDS is there, then many other diseases are there. I don't remember the names also because there is no need. We don't want to be a doctor. We want to be a chartered accountant. Okay, no? So as a chartered accountant, we are not supposed to remember these names. But Whenever there is a disease, for that disease, if the loan was taken for the treatment of that disease, so we are supposed to check that whether that disease is a specified disease or not. So for that, what we are going to do? We are supposed to check rule 3A. In rule 3A, if the name of the disease is given, then the disease is a specified disease. But don't worry, in the examination, no, they will tell you that the loan was taken for the treatment of this disease and this disease is a specified disease as per rule 3A. Now, who will be suffering from these diseases? Come on, who will be suffering from these diseases? Either the employee or his family members. So employee or any of his family member is suffering from these diseases. And for these diseases, that for the treatment of these diseases, the employee is taken a loan of any amount. So on that loan, any interest benefit will happen, but that interest benefit will also be fully exempt, because that interest benefit is not given with an intention to provide any personal benefit to the employee. That interest benefit is given as a help to the employee who is already having a burden on his head for the treatment of this disease. Just imagine if there is an employee and he or any of his family member is suffering from these diseases. So the cost of treatment of these diseases is very high and he does not have the money to pay for those costs. So as a result of that, he had to take the loan. So, but if he is going to a bank to take that loan, medical loan, the bank is charging 15%. So he was very much, in need of money. But he, at the same time, if he would have taken that money from the bank, he would have paid 15% extra as what? Interest. So he told his employer, that employer, see, the bank is going to charge me this much, 15%. So my cost of that treatment will be, going very high. Because if the cost of treatment is 10 lakh and if I'm taking the 10 lakh rupees loan from the bank is going to charge me 1,50,000 extra. So my cost of treatment will automatically become how much? 11 lakh 50, and which is very costly for me. So can you please help me out with this loan? So employer said, okay, no problem. Take this 10 lakh rupees loan from me and don't pay me the interest. Entire 1,50,000 interest is saved or not? Hello? Isn't it a benefit? But the employer's intention was not to give you this benefit as a personal benefit. He was offering his help to you. So the help coming from the employer like this cannot be treated as personal benefit, fully exempt. So whatever may be the amount of loan, whatever may be the interest benefit on that entire interest benefit will be fully exempt if the loan was taken by the employee from the employer for treatment of what? Specified disease. Getting my point, everyone? Hello? So now that same example which we did, here instead of educational loan, it was written that loan taken for medical treatment of specified disease. So this entire interest benefit which you have calculated, no, would have been fully exempt. So no need to calculate also now. Got it, friends? Everyone? So this is the end of first perquisite in clause number 8. Will you remember? Now the second perquisite is traveling, touring and accommodation. See this list. Traveling, touring and accommodation. See, traveling, touring and accommodation happens while the employee is going for official tour. And it can happen while the employee is on a personal vacation with his family. So if traveling, touring and accommodation facility is provided by the employer to the employee while employee is on what? Official tour. And while employee is on personal vacation. Okay. So this facility is given traveling, touring, accommodation, meaning that you are going to Mumbai for company's work. And while you will be in the Mumbai doing company's work, so your local traveling and touring will happen, no? So the cost of that local touring and traveling will be met by employer. And the accommodation will also be provided in some hotel, etc. or some guest house of the company, etc. Yes or no? So whatever accommodation is provided, whatever traveling touring facility is provided, on that the employer might incur some money. That is a benefit for you, but that benefit is not personal in nature, that is official in nature, because you are going for a official tour. But wait, while you are on official tour, can any of your family member accompany you? Yes or no? Yes, definitely. If you are going to Mumbai for 7 days, 8 days, Kaushik is going to Mumbai for 7, 8 days. So his wife also accompanied him. So whatever amount spent by the employer on traveling, touring and accommodation of Kaushik when he was on official tour will not be taxable for him, fully exempt. But his wife also accompanied while he was on official tour. And for his wife also accommodation was given, traveling touring benefit was given. And that amount was also spent by the employer. Now even if he is on official visit, but is the amount spent on him or his wife? His wife. That amount will be a personal benefit for him. Getting my point? But during his official tour, whatever amount spent on him for his traveling, touring and accommodation will be fully exempt, because that is not a personal benefit for him. Got it? So while employee is on an official tour provided by the employer, while employee is on official tour for the employee, the benefit was provided by the employer for the employee, fully exempt. And for family member accompanying the employee, it will be fully taxable. Now how to determine this value? Don't worry, amount will be given in question only. Understanding? Amount will be directly given in the question. Just pick up that amount and charge it taxable. Now how this will be given in the question? Employee is going on official tour of 7 days and his wife is also accompanying him. Total cost of traveling, touring and accommodation incurred by the employer on this official visit for both his wife and the employee, total was 50,000 rupees. This amount is given in the question. What you will do? Out of 50,000, half would relate to him and half would relate to wife proportionately. If no proportion is given, half. But if it is given in the question, out of that 50,000, the traveling, touring and accommodation benefit for the official tour of the employee was 35,000 for employee. Then out of 50, 35 is exempt. But the balance 15,000 would have been for the traveling, touring and accommodation of spouse, no, accompanying him. That will be fully taxable. Got it? Sure. Now, while the employee is on personal vacation, then for employee as well as family members, both, it will be fully taxable. Now for employee also, whatever benefit is given, traveling, touring and accommodation will be taxable. And for family members also, whatever benefit was given, that is also fully taxable. Because now the visit is not official visit, now the visit is personal visit. It is a vacation. So amount, whatever benefit will be there, that will be fully taxable. And don't worry, this amount will also be given in the question. Done? Sure? So this was your second perquisite in clause number 8. Now can you see food or meals? Food or meals? Now pay attention. If your employer is providing you food and non-alcoholic beverages, meaning he is providing you what? Meals. This meals provided to the employee. Now whatever will be the cost of the meals incurred by the employer. So for this meal, cost incurred per meal by the employer. This cost which is incurred for every meal by the employer is a benefit for the employee. See, for your meals, I'm spending 50 rupees from my pocket. Isn't it a benefit for you? It is a benefit. From my pocket, I'm spending 200 rupees for your one meal. Isn't it a benefit for you? For your meal, I'm spending 150 rupees out of my pocket. Isn't it your benefit? Whatever amount spent by the employer as a cost for your each meal, that will be your benefit. But remember, if the cost incurred per meal by the employer happens to be 50 rupees per meal, 50 rupees per meal, then it will be fully exempt. Then it will be fully exempt. Nothing will be taxable. So per day, a meal is given. And what is the cost of that meal? 50 rupees meal is given to you. So benefit happening per meal. Per day, how much benefit happening? 50 rupees? No. Fully exempt. Poda. Understood? Now wait. What if the cost incurred per meal is greater than 50 rupees per meal? Then out of this, up to 50 per meal is what? Is exempt. But any excess amount over and above 50 will now be what? Taxable perquisite. But out of that excess amount, reduce the recovery, because there is a possibility, no, that a meal is provided to you, the cost of that meal will be 150 rupees, 120 rupees, example. So how much is the benefit happening? 120. But out of that 50 is exempt only. So how much excess is there? 70. 70 per meal will be taxable to you. But the employer is charging 60 rupees per meal from you also. What the employer is saying, that we are going to give you a meal whose cost is 120, but you are supposed to give us 60 rupees back. Still it is a benefit for you, because 120 worth of meal given to you for only 60 rupees. Still 60 rupees benefit is there, but out of that 50 is exempt. So how much is taxable? Only 10. 10 per meal will be taxable. Getting my point? So how much was the total benefit? 120. Out of that, 50 per meal is exempt, so 50 is exempt. How much remaining? 70. Out of that 70, which is going to be taxed in your hands now, is the employer recovering 60 from you? Yes, reduce that 60. How much per meal benefit happening to you? 10 only. Multiplied by number of meals, like this. How many meals are provided in the previous year? So if the question says, these type of 225 meals were provided. So 10 rupee per meal benefit final taxable multiplied by 225. So the total taxable value will be 2250. Hello, sir. But if the question does not specify that how many such meals were provided in a year by the employer, then you will have to make an assumption. 300 working days are there, no, in a year. 365 minus 52 Sundays minus 13 public holidays. How many working days? 300 working days. So you'll have to make an assumption that this meal was provided for 300 working days. Employee would have gone for these 300 working days, and for all the 300 working days he would have got this benefit. So multiplied by 300. So 10 into 300 will be 3000. If you don't want that we should take how many days? 300 days. Tell us no for how many days the meal was given. We will multiply by those many days. But if you are not telling, we'll have to take some assumption, no? And what is the best assumption? Take 365 days. No. Best assumption is full year means 300 days. That's it. Because those 300 days are only working days, during which only you would have gone and you would have got what? Meals from your employer. Got it? Everyone? Now this meal, 50 rupees, up to 50 rupees, the value is exempt. What is more than 50? 50 is exempt and excess is taxable minus the recovery. Now how the employer can give you these meals? Come on, tell me. How he can give you the meals? Can he have a canteen in the office? So in the canteen, food is served to you. So the food, one-time food which will be served to you in the canteen will cost the employer 50 rupees or less, fully exempt. One-time food served to you in the canteen will cost the employer 180 rupees. 50 is exempt. 130 is taxable. But out of that, if 60 rupees is recovered, then 130 minus 60 will give you 70. That 70 will be taxable per meal. In canteen, this can be provided. But what if there is no canteen then? Then the employer can order it from outside caterer. So the meals is provided to you inside the office, in the canteen also, or inside the office can be ordered from outside, from any caterer, it can be brought. Still the treatment will be same. Hello, sir. But wait, no canteen and the employer is not going to order also. Employer will give you a food voucher of rupees 150. That food voucher will be valid in the nearby restaurants. Go and eat in any restaurant and give this 150 rupees of food voucher. Worth 150 food you can have in any restaurants nearby. Hello? So that is as good as 150 voucher is as good as 150 rupees of what? Cost incurred on your meal. Getting my point? That time also the treatment will be like this, same only. Everyone understood? So the meals can be provided. The meals can be provided in canteen or through caterers or through non-transferable food vouchers. FV means food vouchers. In any of these cases, the cost per meal was 50 or less will be fully exempt. More than 50, then 50 exempt, excess will be taxable. And out of that excess, reduce the recovery also. Will you remember this? Everyone? Now, should I ask you one question? Will you answer? If food is provided by employer in to the employee and the employee is working in project site, dam site, mining site, etc. Possible or not? And the cost of that food was 150 per meal, fully exempt. No need to do 50 exempt, no, 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 no. If the employer is providing you meals in such places, by providing you meals in such places, he is not going to give you, he is not giving you some personal benefit. He is rather fulfilling his responsibility. Just imagine in such type of areas, if accommodation was given, the value of that accommodation was exempt, yes or no? So what if in such type of areas, you are being sent to work in such type of areas? Then it is the responsibility of the employer to accommodate as well as feed you in that area, no? So by giving you food in that area, in these type of locations, the employer is not trying to give you some personal benefit. The employer is giving you what? Employer is fulfilling his responsibility. Fulfilling his responsibility by giving you food here. How can that be treated as your personal benefit? Can it be treated as your personal benefit? No. So whatever food provided here, whatever is the cost of per meal, it will be fully exempt and the taxable value of this perquisite will be nil, friends. Will you remember? Sure. Now what if rupees 5,000 per month given to have lunch every day? And out of that you are spending 4,000 per month for lunch. Lunch given or money given for lunch? If lunch given, no, then perquisite. But if money given for lunch, it is an allowance, fully taxable. Out of that you are spending 4,000, no, ignore, underline, bullshit, because the entire amount will be taxable. And the amount spent out of that allowance will not allow you to take any benefit, will not allow you to take any deduction or exemption. So ignore that 4,000 per month. Hello, sir. So if a fixed amount on a monthly basis, means regularly, given to meet cost of meals, so that is what? Either food or lunch, or you can say tiffin allowance. You can call it food allowance, you can call it lunch allowance, you can call it tiffin allowance. Yes or no? What will happen? This will be fully taxable. Will you remember? Any amount spent out of this allowance, amount spent will be ignored because it is fully taxable. Then the last point I would discuss with you now. Last point I will discuss. The last point is, what if employer is providing refreshments? Refreshments, you know, refreshments. Idli, medu vada sambar, chutney, then coffee, tea, breakfast. These are known as what? Refreshments. Some small biscuit packets. So all such things can be provided inside the office as what? Not as meals, but as refreshments. See, sometimes what happens, we have a meal in the afternoon and our stomach becomes empty by evening 4 only. Hungry, very hungry, very hungry. I want to go out, I want to eat something, I want to go out, I want to have coffee. Why are you going out? If you'll go out, you'll waste your time, no? Don't worry. In the office only, the coffee will be served. In the office only, the tea will be given. In the office only, you'll be given snacks. Hello? And don't worry, you're not supposed to pay the money for that. 10 times if you want coffee, 10 times the coffee will come in the day. 20 times tea if you want, you have the tea for 20 times in the day. Have it how many times you want. But at least work. Don't waste your time. In many organizations, big organizations, the employer will be so much, kind that he is going to give you coffee, he is going to give you tea. There will be, flow of these things. He will be giving you some biscuit packets. He'll give you some biscuit packets of that muruku and all. He will give you all such sort of things so that you keep on munching. Keep on munching and keep on working. Keep on munching and keep on working. But don't you think that to provide all such refreshments, the employer will have to incur cost? For the full year, no? For my 100 employees will be working for me for the full year, will be having unlimited coffee, tea, snacks. I'm going to spend 50 lakh rupees a year. 100 employees means, just imagine, turnover will be huge. And for me, handling 100 employees, I will have to take care of my 100 employees, no? So I will be spending the amount on refreshment. So how much amount I spent for the full year? 50 lakh rupees I have spent. So per employee, on an average, how much I am spending? Per employee. 50 lakh divided by 100. 50,000 rupees. On an average, per annum, 50,000 for each employee I am spending. It is an average, huh? Understanding? So tell me, by taking these refreshments, are you getting a personal benefit? Yes, you are provided personal. This is not my responsibility. I am not fulfilling my responsibility. Now this is provided as personal benefit only. So the benefit happening to one employee out of this 50 lakhs will be how much? Come on, tell me. Simple, no sir. 50 lakhs divided by number of employees. Proportionate amount will be how much? 50,000. So for each employee, the benefit was how much? 50,000. So 50,000 will be taxable for this employee, 50,000 will be taxable for this employee, 50,000 will be taxable for this employee. But don't you think that there will be problem here? If the out of the total 50,000 is treated as benefit for each employee, just imagine Kaushik is there, no? He at least drinks 20 cups of tea and coffee in a day. He will at least have this much coffee and tea. Plus on top of that, he will have the murku, biscuit and everyone. For him also and for everyone also, he will only have. For the full day, if you will see him, no, full day he will keep on munching some or the other thing. Full day he will be having a cup of coffee or tea in his hands. So if you count for him, it may be more than 50,000. But Akshaya is there. She is not having a single cup of coffee, single cup of tea. Lactose intolerant. Maybe. Or she brings everything from home. She does not have anything from outside. So just imagine, Akshaya will not be having a single cup of coffee, single cup of tea. She'll neither have any snacks from the office because everything she is bringing from home only. She does not eat outside food. Or she does not have anything from outside. And out of 50 lakh divided by 100, 50,000, if this is taxed to Akshaya, isn't it bad for her? that I did not take a single rupee of benefit out of the total 50 lakhs of refreshment. Still, out of that 50 lakh, 50,000 is getting taxed to me because it was a proportionate amount. And this Kaushik will be very happy that thank God only 50,000 got taxed. In the entire year, I took the benefit of how much? Approximately 1 lakh, 150 lakhs. 1 lakh 50,000, I would have taken the benefit. But see, apportionment happened, no. I got taxed only 50,000. Understanding? So, apportionment will not be an option. Some other thing has to be done. For every employee, the benefit shall be calculated separately, no? But it is next to impossible that out of the total amount spent by the employer on your refreshment, how much benefit is happening to which employee. It is not possible to know. Hence, whatever benefit happening to one employee from this refreshments provided by the employer will be fully exempt because it is not known or cannot be known also, cannot be apportioned also. Yes or no? So, refreshments provided by the employer in office premises to the employees is a personal benefit. Is it a personal benefit? The answer is yes, it is a personal benefit for the employee. But one cannot identify that how much personal benefit happening to single employee out of this. Hence, this will be fully exempt. Hence, the taxable value of perquisite will be taken as nil. Understanding? So, this was your food or meals provided by the employer. Done? So, how many perquisites we have done so far? Clause 8. Number 1, interest benefit we have done. Number 2, traveling, touring and accommodation we have done. Number 3, we have done food, means meals. And now we are doing gifts. See, employer can give gifts to whom? To employee or any member of household of the employee. Meaning, employee's household, any member can be there. To that member also the employer can give gifts. So, whatever gifts which are given by the employer, if the gift is in cash, meaning the monetary gift is given, money is given, then whatever may be the amount, it will be fully taxable. Any gift given in what? Cash by the employer to the employee will be fully taxable perquisite. Yes or no? Whatever may be the amount of that gift. Now, if the gift is given in kind, then we have to see that the aggregate amount of gift in kind. Aggregate amount means the amount of the gift in kind given to employee during the year, the gift in kind given to member of the household during the previous year, whatever gifts given to employee as well as member of the household. Take the total. You have to see that during the previous year, how many such gifts are given to the employee also and to the household member also. Take the total of all such gifts. So, total of all such gifts given in the previous year, that aggregate amount you have to see. If that aggregate amount of gift is up to rupees 5,000, 5,000 per annum, then nothing is taxable. Then it will not be treated as a perquisite, it will not be taxable at all. If the aggregate amount of gift in kind happens to be 5,000 or less, then the rule becomes silent. At one more place, the rule became silent. You remember? Educational facility. The reasonable cost of education for the education of the children. in a similar school, if 1000 per month per child or less, nothing taxable. Then the rule became silent. Then what we did? If it is more than 1000 per month per child, then it is taxable. Two possibilities, either the full amount taxable or excess can also be taxed. Same to same logic we are supposed to apply here also. If the gift given in kind, aggregate amount of such gifts during the previous year is more than 5000 per annum, yes or no, then it is taxable. Then it is taxable. How much? Excess amount can also be taxed and full amount of that gift can also be taxed. Both the things you are doing is correct. Hello sir, can you charge excess over and above 5000? Yes, that is also correct. Can you charge the entire amount of gift? Yes, that is also correct. Because if the rule is silent and I have to tax an amount, so I can tax full also, I can tax excess also. If you don't want us to tax what? Any of these two amounts, you tell us no what to do. If your rule is not saying, we are free to do anything. Hello sir. So what we will do in our solutions? We will charge the full amount. And we will write a note also that in the absence of any specific information in the rules, we have charged the entire amount of gift since it was more than 5000. Alternatively, the excess can also be charged. Full stop. That's it. Will you be able to write like this? Everyone? Sure? Should I move ahead? Now wait. Gift from any other person who is not your employer. Will you bring it here or you will bring it under the head IFOS? Always IFOS. So if gift coming from employer, either it comes to employee or it comes to household member of employees, will always come here. Yes or no? But if the gift coming from some other person who is not your employer, then that gift will go to IFOS. Everyone understood? But there is one exception you have to remember. When you will go to IFOS, no? When you will go to IFOS, then in IFOS, there are certain exceptions. They are saying that the gift, amount of gift has to be more than 50,000. And there are certain exceptions also. Those exceptions says that if the gift is received in these exceptional cases, then whatever may be the amount of gift, it will not be taxable. Out of those exceptions, there is an exception. Any gift received on marriage will not be taxable only. So are you receiving any gift on marriage? Yes. From anyone you can receive? Yes, that will be fully exempt. Whatever may be the amount of that gift, any gift received on marriage will not be taxable at all. So can your employer come to you, come to your wedding? Yes. Can he give you gift on your wedding? Yes. So here the gift is not given in the form of employer-employee. Here the gift is received by you from your guest who is coming and blessing you in the marriage. So even if that gift is received from employer, but it is received on the occasion of marriage, will not be taxable at all. Any gift other than received on the occasion of marriage. So gift is received by the employee or any member of the household of the employee, but that gift is not received on the occasion of marriage. Any other gift should be there. Yes or no? Sure. In cash, then fully taxable. In kind, then up to 5000 not taxable. More than 5000, full amount can also be taxed and excess can also be taxed. Gift perquisite is done. Sure. Should I move ahead? Now pay attention. Both are what? Taxable. Both are taxable under the head salary. how much value will be taxable? You're not supposed to bother. Why? Because the question will give that this much worth of credit card facility given and this much worth of club facility is given. It will always be given in the question. Understanding or not? So if it is given in the question, so I will just have to take up that amount and charge that under the head salary. That's it. Will you be able to do it? How that value will be calculated? The valuation is given that whatever your credit card bills paid by the employer, any annual fees of the credit card paid by the employer, add that also. If some credit card expenses happened for official purpose, reduce that amount. Then whatever balance remains, that will be your personal benefit, that will be taxable, minus some recovery is happening, that recovery you reduce. Now the balance will remain, that will be your credit card facility taxable amount. You are not supposed to do all such things. The value will be given directly in the question itself. Pick up that amount and charge it taxable. Will you be able to do it? Now club facility can also be given. Now with regard to this club facility, there are two things which I want to tell you. Two things. See, whenever the club facility is given, meaning that the club facility is enjoyed by employee and his family members, household members. So whatever amount the employer will spend on the club facility for the employee or any of his household member, that entire amount will be benefit, personal benefit for the employee. So how much amount you will take? You will take the amount actually spent by the employer. Hello. For you as well as your household members. Sometimes the annual membership fees of the club also paid by the employer. Then take that amount also as your benefit. Now the total will be your personal benefit minus the recovery. But wait, before reducing the recovery, if the club facility was used for business purpose, sometimes it might also happen, that in the club only you are scheduling some business meetings. So the amount spent by the employer for the full year on your club facility will not be only personal. Out of that, some amount will be official also, because the club facility is enjoyed for business purposes also. Sometimes to, some foreign clients are coming, some delegates are coming, to entertain them, you must have taken to the clubs, or some business meeting you are arranging, a casual type of business meeting you are arranging in the club. So that time also the club expenses will be met by the employer. But this time it is not personal in nature. This time it is official. So during the full year, whatever amount spent by the employer on your club facility, including the annual fees of the club, will be your personal benefit. But out of that, if some amount is spent for the official purpose, reduce that amount, because that is not your personal benefit. Now the balance will be your personal benefit, but out of that also whatever recovered from you will be reduced. No need to do such calculation also, because it will be given in the question. You will apply your small mind, you will get big answers like this. Getting my point? This will always be given in the question. Don't worry. You have to take the value and you have to show it taxable. But if the club facility, in the club facility, there are two notes. Note number one, if instead of club facility, recreational facilities provided inside the office premises uniformly to all employees. Few examples. A small community hall is constructed by your employer, where he has provided table tennis, he has provided carom board facility, one small billiard table is set up there, people are going and playing snooker and billiards, one small gym he has set up inside the office. So if you want, you can take care of the health, you can do some exercises in the gym also. Very big companies, big employers, we know that from the early morning you are there in the office, and by late in the evening you are in the office, so you don't have any time to go and recreate yourself. You don't have some recreational times because your entire time is spent in the office. And after you go to your home in the late evening, there might be a chance that all the recreational facilities are already closed down. So you'll not be able to entertain yourself, or you'll not be able to do anything for your recreation. Ultimately, that will affect your mental health. Ultimately, you will keep on staying stressed. Your work will be affected. And in all such cases, what will happen? Your work will affect. Ultimately, the business of the employer will affect. Getting my point, everyone? So in this particular scenario, whenever your employer provides you these kind of recreational facilities in the office, now am I audible or visible? So due to some network issues, okay. Now pay attention. Whenever some these type of recreational facilities will be provided in the office, like carom board, etc. is provided, employer knows that the employee will be in the office only from early morning till late evening. So let him enjoy, let him play, let him recreate himself, let him get some entertainment. So by doing this, he will be relieved from some work stress and he'll be able to work properly. And by doing that, he will do some networking also with other employees, which is very much required, because looking at his life, he is not enjoying his life at all. Getting my point? If you must have heard about Google. Have you heard about Google? Google has such a beautiful office now. If you will go and see, there are so many such type of facilities, and there are so many facilities which you have hardly heard about also. Would you believe if I tell you that Google has swimming pool also inside? If you don't take a bath in the morning while going to the office, no problem. Bring your clothes and everything. Take a take this uh, take the bath in the swimming pool only. The swimming pool also, too many such benefits are given. So what I want to tell you here, that inside the office premises also these kind of facilities can be provided by the employer. So on such recreational facilities, the employer is incurring cost. Cost is incurred by employer. Now tell me, to maintain, to provide such type of recreational facility for the full year, the employer will have to spend some cost. And by incurring that cost, the benefit will happen to the employee, because employees are anyways going to enjoy these facilities. Yes or no? So full year, 1 crore rupees spent for these recreational facilities. 1 crore rupees for these recreational facilities. Just imagine how much benefit happening to each employee. Next to impossible to find out. Why? It cannot be 1 crore divided by number of employees proportionately given, because some employee might be taking more benefit, some might not be taking at all, or some might be taking very less benefit as compared to the value which is getting taxed. Yes or no? So total benefit divided by number of employees cannot happen. The proportionate amount cannot be taxed. Then for each employee, we'll have to check that how much benefit each employee is taking out of this cost, which is very difficult. No, which is impossible to determine that out of the total cost incurred by the employer on such facility, how much benefit happening to which employee. Hence, even if this is a personal benefit, it will be fully exempt in the hands of employee. The taxable value here will be nil. Everyone remembering? Will you remember? Understanding? Okay, perfect. This was your 1 point. 1 point to keep in mind. Second point, employer pays the annual one time, sorry, not annual one time, employer pays corporate membership fees to the club. Now this corporate membership fees is what? One time fee for all employees. So now the employer will go to some club, tell the club that my employees will come and enjoy your facilities. You are supposed to allow my employees and their family members to come in your club and enjoy all your facilities. Tell us how much amount you charge. So the club was saying we charge per head. No, 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 not per head. 500 employees are there and plus 500 their family members. So total 1000 members will come and they are going to enjoy your, enjoy your facilities for the full year. Tell us one fixed amount, how much you want. They say 10 crore rupees. Okay, no problem. 10 crores for the full year and all my employees and their family members will come. We will give you some, we will give them some cards. Those cards they are going to bring to your club, and after showing that card, you are supposed to allow them to enjoy your club facilities. Yes or no? Club says, okay, no problem. We have given 10 crores. Now that 10 crores is a corporate membership. One time fee for all the employees and their family members. By paying this amount to the club, the ultimate benefit will go to the employee only, no? And that benefit is personal nature. But tell me, out of this total amount, how much benefit will happen to which employee? Can you know it? Proportionately forget only. Proportionate will not be done. Total amounts divided by number of employees, no. And it is also not, we are not also able to identify that out of this total amount, how much benefit will happen to which employee. Hence, this will also be fully exempt. Taxable value will be nil. Don't charge these amounts under the head salary or anywhere else because these are fully exempt benefits. Why fully exempt? They are personal benefits, but they cannot be apportioned because apportionment will be biased. Okay. And it is next to impossible to know that out of the amount spent by the employer for the employees, how much benefit is happening to which employee. To determine that amount, it is not possible. Hence, the benefit, even if it is personal benefit, fully exempt. Got it? Sure, sir. Shall I move ahead? This was your credit card facility and club facility. Now we are moving to the next part. Next part is use of movable asset. Sir, YKT. YKT. You know this. Do you remember furniture along with accommodation given for use? Do you remember motor car given for use? What was furniture? Movable asset only, no? What was motor car? Movable asset only, no? How much amount you were charging? You were charging 10% per annum of the actual cost. If the asset was owned by the employer and given for use, or if the asset is hired by the employer and given for use, then actual hire charges paid by the employer. So either 10% of the actual cost or actual hire charges paid by the employer, as the case may be, that is only your benefit, no? Minus any recovery for such use. You know this, very easy. But if the use of movable asset and the movable asset given for use is laptop or computers given for use, then the benefit is fully exempt taxable value here will be nil. Why? Because it is very, very, very difficult. No, it is next to impossible to know that how much personal benefit will happen to the employee by using this. Because it will be used for both the purposes. It will be used for official purposes as well as it will be used for personal purposes. But how much personal benefit will happen by using this laptop or computer cannot be determined. Hence, forget about taxability, fully exempt. Yes or no? But about the other assets, which are movable assets, yes or no? Either 10% per annum of actual cost if the asset was owned by employer, yes or no? Or actual higher charges paid by employer if the asset was hired by employer. Either this amount or this amount, whichever is higher, whichever is lower, or any one of these two will be your benefit. If you are taking 10%, then higher charges will not come. And if you are taking higher charges, then 10% will not come. Is it possible more than one asset given, two assets are given, and one asset is owned and one asset is hired? Yes, then both will come. Add both of them then. Getting my point? Minus what? Minus recovery from the employee, if any. The balance which will come, that balance will be taxable fully. Easy or no? Sure. Now, here comes the last one. See, this is an employer. Employer transfers means sold any movable asset. And this was sold to the employee. Now it was sold for a concessional price, meaning that the selling price is lower than the value of such movable asset. So whatever difference between the selling price and the value will be there, no? That difference is nothing but the benefit for the employee. Because selling price recovered is very less as compared to the value of that asset, no? So whatever difference is there between the selling price and the value of such asset, that difference will be taxable as perquisite. Now what you are supposed to calculate? Come on, tell me. You are supposed to find out the value of movable asset. Now see guys, why this perquisite and this perquisite are different? Come on, tell me, what is the difference between this perquisite and the next one which we are doing right now? Here, you are not given the ownership of the asset. Once the use is done, no, give it back to me. That asset belongs to me, will come back to me. Use of movable asset. Laptop or computer is there, fully exempt. Other asset, 10% or actual higher charges as the case may be. Yes or no? But here what is happening? Now the ownership is getting transferred. The asset which initially belonged to me, after I sell, now it will belong to you. You will become the owner of that asset. Yes or no? But when you will become the owner of the asset, you should become the owner at a price. But you are paying less than that amount also. Hence a benefit is happening. So what you are going to take, you are going to calculate this value of movable asset as on date of sale. So the date on which that asset is sold to you, as on that date, what was the value of that asset? Minus the sale price recovered from the employee. So whatever balance will be there, no, that balance will be only what? Taxable value of perquisite. Understanding? Hello? But this perquisite will arise only if the value was higher and the sale price was lower. What if the value was 5 lakh and that asset was sold to you for 1 lakh only? Isn't it a benefit for you? Yes, 5 lakh worth of asset you are getting only for 1 lakh, 4 lakh rupees of benefit happening to you. But what if the employer charged 8 lakh rupees from you for that 5 lakh rupees of asset. Is it a personal benefit anymore? No. The employer is charging more. No personal benefit. So personal benefit will arise only if the selling price was lower as compared to the value, or the value is higher than the selling price. Now you are supposed to calculate this value. You are supposed to calculate this value. How would you calculate? Come on. How would you calculate this value? Now the calculation we are learning. Now whatever calculation we will learn now, by doing that calculation, we will determine this value. Okay. Now we are supposed to take the actual cost of movable asset to employer, because the employer is the owner. Employer is selling you that asset. First we'll have to see that at how much amount the employer bought it. What was the cost of that asset to the employer? And after taking that asset, the employer used that asset in the business, and after using it, he is selling to you. So before selling you and after acquiring by him, the asset must be used in his business. So for whatever period the asset was used, for every completed year of use, what did I say? For every completed year of use, the asset got depreciated. So reduce that depreciation out of this. So depreciation will be reduced, and we call it what? Wear and tear. Wear and tear. And this will be for each completed year of what? Use. Any year, any fraction of the year of use will be ignored. Wear and tear, meaning this depreciation will be allowed to be reduced only for completed year of use. So for example, the employer is buying a car, motor car, and that motor car is bought on 1st of December 2021. When the motor car was bought, friends? 1st of December 2021, this motor car was bought. Okay, motor car bought by employer, and as on this date, the actual cost of the motor car was 5 lakh rupees. Possible? Not possible. Now, after purchasing this motor car was used by the employer in his business. So, employer kept on using, and this same motor car is sold to you in 24-25. After using for some years and some months, it was sold to you. So, can I say, if that motor car which was bought on 1st of December 21, this same motor car was sold to employee on 1st of February 2025, and it was sold for rupees 2 lakhs only. This information will be given in the question only. We are supposed to take this information from the question. When the employer purchased the car? 1st December 21. And from that date only, the employer started using the car for the business. The employer used the car for some years. Then after using in the business for some years, on 1st of February 25, means in our previous year, in the February month, in our previous year, that motor car was sold to the employee for how much? 2 lakh rupees. Getting my point? So what will happen over here? Is the employee having some benefit? The answer is yes, sir. Employee is having, definitely he is having a benefit, because 5 lakh worth of car is sold to him for 2 lakhs, 3 lakh rupees of benefit. I will give you 3 lakh slaps if you do it like this. First of all, after purchasing and before selling to you, was it used in the business? So for the every completed year of use, what did I say? For every completed year of use, you are supposed to reduce wear and tear. So can I say first full year use is over on 30th November 2022? First year used. Then 30th November 23, second year also fully used. Then 30th November 2024, third year also fully used. And now I come 30th November 2025, the employer would have used till this date, then I would have said that fourth year is used. For the fourth completed year, the asset was used. But before that only, before 30th November only, on 1st February 25, it was sold. So can I say after using for 1 full year, 2 full year and 3 full year, and in the fourth year of use, what did I say? In the fourth year of use, on 1st of February 25, it was sold to you. Hello, for how much? 2 lakhs. Getting my point? Now, if we were doing accounting, no, what we would have done, we would have taken the depreciation for this year also. We would have taken the depreciation for the second year also. We would have taken the depreciation for the third year also. And we would have taken the depreciation till 1st February 25 also, if we were doing accounting. But are we doing accounting, or we are determining the taxable value of perquisite as per income tax rules? So income tax rule says that when you will calculate the taxable value of this perquisite, no. So to calculate the taxable value of this perquisite, out of the actual cost of that asset, you will reduce what? Wear and tear, and that wear and tear will be reduced for every completed year of use only. So first year, completed year of use. Second is also completed year of use. Third is also completed. Fourth year, the asset I started using, I would have completed the fourth year of use on 30th November 25. But before that only I sold on 1st February 25. So could I use the asset for fourth full year? No. So for how many years? Completed years the asset was used. Only 3 years. So for these 3 years, the depreciation, the wear and tear will be reduced. Got it? Now at what rate it will be reduced? Now this wear and tear, at what rate it will be reduced? So if it is motor car, if it is computer, laptop or electronic gadgets or other assets. What did I say? If it is motor car, computer, laptop or electronic gadget or other assets. For motor car, the rate of wear and tear, the rate of depreciation which I have to reduce will be 20% on WDV basis. For computer, laptops and electronic gadgets, it will be 50% on WDV basis. And for other assets, it will be 10% on SLM basis. Did you understand? This you have to remember, huh? This you have to remember these rates. So if the employer is selling his motor car after using for some years, so for every year of use, every year of completed use, wear and tear will be reduced at 20% WDV basis. If the employer is selling you computer, laptop or electronic gadget, then for every year of completed use, 50% WDV will be reduced. Wear and tear will be reduced at what rate? 50% WDV basis. And for any other asset other than computer, laptop, electronic gadget and motor car, for any other asset, the wear and tear will be reduced for every completed year only. But that will be reduced 10%. What? SLM basis. Depreciable? What if it is not a depreciable asset? All the movable assets are depreciable only, Kaushik. How can you say it is not a depreciable asset? All the assets which are used in the business, no, will be depreciated only, no, Mucha? I cannot hear you. You will have to type only. So we are talking about those assets which are depreciable. If you are saying gold, will you ever depreciate the gold? Gold, what is the fair market value as on today given it to you for some amount which is less than the value? Will you depreciate gold? Or will take the full value minus the amount taken? That will be the benefit. What we are saying here, movable assets which before selling you and after acquiring used in the business which were eligible for what wear and tear. I'm talking about those assets. Got it? Everyone here. Now tell me which asset the employer is selling you. Motor car, no? So I will take 10% SLM, 50% WDV or 20% WDV. 20%. So for first completed year, the depreciation will be 5 lakh into 20%. It will be 1 lakh. Second completed year, the depreciation will be 80,000 because now the depreciation will not be on 5 lakh. It will be 5 lakh minus 1 lakh on 4 lakh. It will be 80,000. And on the third year, it will be 64,000. Did you get this depreciations? Wear and tear? Fourth year, no. If I would be doing accounting, I would have taken the depreciation till 1st February if I was in accounting, but I am not doing accounting. I am in the Income Tax Act and I am determining the value. Getting my point? So here they are saying for every completed year only you are supposed to reduce. Tell me how much you are getting. This is 5 lakhs minus 1 lakh minus 80,000 minus 64,000. You will get 2,56,000. Can I say 2,56,000 will be the value as on 30th November 24? And that will be the same value as on 1st of February 25. Because after 30th November till 1st February, no wear and tear will be reduced. So now do I have the value as on the date of sale? Now compare this value with the sale price. Sale price is lower than this value, meaning that you are having a benefit of how much? 56,000. Got it? That amount will be taxable under the head salaries. Sure, sir? Everyone? So 56,000 benefit will be taxable. Now we have reduced this by applying 20% WDV, 20% WDV, 20% WDV. Why? Because it was motor car. What if computer, laptop, electronic gadget was there? 50% WDV, 50% WDV, 50% WDV. Now start doing 50% WDV. Tell me, first year 2,50,000, second year 1,25,000, and third year 62,500. Hello? First year 2,50,000, 50% of 5 lakhs, 2,50,000, reduce. 2,50,000 will be WDV. On that 2,50,000, 50% will be 1,25,000, reduce. So now the value will be 1,25,000. So for the third year on 1,25,000, 50% will be 62,500. Hello, sir. So what will be the balance remaining? 62,500. Now see the selling price. Is the selling price lower than 62,500 or higher? Higher. No personal benefit. Understanding? What if it was not motor car, it was not computer, laptop, electronic gadget, it was some other asset. For example, it was air conditioners. Sorry, for example, it was a motorcycle. Then motorcycle is not a motor car. Motorcycle is not a computer, laptop, electronic gadget. Any other asset? No. So 10% SLM. So 5 lakh into 10% will be 50,000. Second year also 50,000. Third year also 50,000. SLM basis. Yo. So 5 lakh minus 1,50,000 will give you 3,50,000. 3,50,000 value is there and the employer is recovering only 2 lakh. How much is the benefit? 1,50,000. Got it? Sure. Now, one more important thing I would like to tell you. Movable asset is motor car, computer, laptop or electronic gadgets or others. So I am talking specifically about those movable assets which are other movable assets. I am talking about these assets. On these assets, wear and tear is allowed at what rate? 10%. And that too also SLM basis. Okay, no? Now, if the other assets are used by employer in his business for 10 years or more, and then sold to employee, will there be any personal benefit in the hands of employee? Question. After using for 10 years in my business, I am selling you that asset. Will there be any personal benefit? The answer is no. Because within 10 years, its value would be zero. 10% SLM, hello. So if the cost of the asset was 5 lakhs, 10% every year, 50, 50, 50, 50, 50, wear and tear reduced. So after 10 years of use by the employer, how much value will now remain? Zero. And that asset is sold to you. Will there be any personal benefit for you? The answer is no. There will be no personal benefit for you. Why, sir? Because within 10 years of use, the use is 10 years or more, no? So, the value after the 10 years will be zero. And against that, whatever recovery is made cannot be your benefit. This benefit will arise only if the value recovered, meaning the selling price, is lower as compared to the value. Here the value itself becomes what? Zero. So employer is not giving you any benefit, rather he is taking benefit from you. Getting my point? Understood? So there will be no personal benefit and the taxable value of perquisite here will be nil. Remember this. Taxable value of perquisite here will be nil. Done? Should I move ahead? Now I will tell you the last one. Any other benefit, facility, amenity, service, privilege, etc. by employer to employee. Employer is giving any benefit now, any damn benefit he will give. Now it will not be notified. Whatever we wanted to notify, we have already notified. Interest benefit, traveling, touring accommodation, credit card, club facility, every single identified and notified also. But now we don't want to identify also. Now whatever other benefits your employer might give you, no, it can be a benefit also, it can be a service also, it can be a privilege also, it can be an amenity also, it can be by any name. This will also be your taxable perquisite. This will also be what? Taxable. That is what clause number 8 says. Yes or no? But what will be the taxable value? Taxable value. What will be the taxable value? Come on, tell me. You only tell me. The amount actually spent by the employer for this benefit, facility, etc. will be your benefit only, no? Minus the amount recovered from you. Whatever balance remains will be taxable. So we don't have to apply, extreme logics to get the answer. Answer is there. Any other benefit if you see, which was not listed above. So now what will be the value? Rule 3, sub-rule 7 says that now the value will be the amount actually spent by the employer to give you such benefit. Yes or no? Minus if he is taking any amount from you, reduce that amount. The balance which will remain, that will be your taxable value. That's it. Done? Clause 8 perquisite done. Now two more perquisites are remaining, but those perquisites are not because of clause 1 to clause 8. There is one proviso. Proviso to section 17(2). As a result of that, you will be learning two more perquisites. One is medical facility and second one is LTA, leave travel assistance. Okay, few questions we are trying to solve. We'll first try and solve few questions. Okay. And then we are going to do those two perquisites, right? Okay. So first we are going to solve few questions. Pay attention. Question number 2. So do you remember question number 1 we have already done? Illustration number 1, that is HRA. This 2 was remaining, no? Come to question number 2. Mr. Shrikant has 2 sons. He is in receipt of children education allowance of 150 per month for his elder son and 70 per month for his younger son. Both his sons are going to school. He also receives the following allowances: transport allowance 1800 per month, tribal area allowance 500 per month. Compute his taxable allowances. Now please pay attention. They have not mentioned that Shrikant is following 115 BSc or he is not following 115 BSc. So we will be calculating our answers in both the ways. What if he is following 115 BSc? What if he is not following 115 BSc? Okay. Now let's say if Shrikant is following this solution number 2, no? Shrikant is following, not following 115 BSc. First of all, not following 115 BSc. Okay. Now tell me, he is receiving which allowance first? Children education allowance. Okay. So children education allowance, how much he is getting? For first child, elder son. He is receiving 150 per month for 12 months. So 150 into 12 will be 1800. Out of that, exemption will be available under section 1014. And 1014 exemption will be available for children education allowance if you are not following 115 BSc. Yes or no? Then how much exemption will be available? 100 rupees per month per child. So for this child, 100 rupees will be exempt. 100 into 12. 1200 will be exempt. So how much will be taxable? 600. And for younger son, he is receiving 70 rupees, no? Only 70. Yes, 70 rupees per month into 12. So it will be 840. And exemption will be how much? Come on, tell me. Exemption will be entire 70, no? Because allowance is received which is less than 100. So the amount received will be exempt. 70. 840. How much will be taxable? Nil. So this was children education allowance. Along with this, he is getting what? Transport allowance. Transport allowance of 1800. See, transport allowance means from office to residence, residence to office. Whatever commute happens, for that, whatever allowance is received, that is either commutation allowance or transport allowance. If Shrikant would have been a handicap employee, then this 1800 would have been exempt because there the limit is 3200. Do you remember? But nothing is mentioned. That means Shrikant is not a handicap employee, meaning that he is not going to get any exemption. It will be fully taxable. Okay. So second allowance is transport allowance, that is 1800 per month into 12. So 1800 into 12 will be 21,600. That will be fully taxable. Now after transport allowance, he is getting tribal area allowance. Tribal area allowance 500 per month into 12 month, and that amount is 6,000. Now out of this, he is getting exemption also under section 1014. and that exemption will be 200 per month for tribal area allowance. Do you remember this? Into 12, that will be 2400. So balance 3600 will be taxable. Sure. Any other allowance received by him? No. All the allowances done. So 21,600 plus 600 plus 3,600. Taxable amount will be 25,800. If he does not follow 115 BSE, then this amount will be taxable. Then taxable allowances will be this much. Now, if he follows 115 BSE, if he follows 115 BSE, will he get exemption for children education allowance? No. In that case, please pay attention here. Now, color, blue color. 115 BSE is followed. Then this exemption will not be available. Then entire 1800 will be taxable. Done. This exemption will not be available. Entire 840 will be taxable. Transportation allowance anyway is fully taxable. And this tribal area allowance exemption will also not be available. Yes or no? So this will be entire 6000 taxable. So tell me how much amount will be taxable now? 1800 fully taxable plus 840 fully taxable plus 21,600 fully taxable plus 6000 fully taxable. The total will be 30,240. This will be the total taxable allowance. Easy, difficult? Understood? Illustration 2 done. Please check your answers. This is 25,800 and this is 30,240. We got the same answers. Okay. Okay. Now let's move on to the another question. 3 is done. Please keep on checking and telling me. 3 is done. 4, 5 and 6 is also done. I guess 4 is also done. Then 5 is also done. 6 is not done. 6 we will do later on after doing PF concept. Okay, no? So let's wait for PF concept to get over. Then we are going to cover the sixth one. Sixth we will wait. Seventh also we will wait. And eighth also we will wait. Okay. Then I guess ninth one is done. If I'm not wrong. Ninth is VRS compensation. We have already completed, no? Ninth is done. Then 10th. This 10th also put a star mark. We'll do it later. 11th. 11th and 12th will be done with, it will be done with LTA. We are supposed to do LTA, and after doing LTA, we are doing these two. 11th and 12th. 13th also we are doing later, after medical facility. 14th. Have we done 14th? Accommodation facility? 14th to 18th, I guess done. All the done. 14th to 18th. Okay, no? Accommodation facility. 14th is done. 15th is also done. 16th is also done. Then 17th is also done. 18th is also done. Now let's come to the next one. 19th. Domestic servant also we did, no? Very good. 19th is done. 20th question. This 20th question is to be done now. Okay. Now this is a full-fledged question on your salary computation. In this question you will be having retirement benefits also, gratuity, pension, leave salary, everything you will have here. And along with that, perquisites will also be there. Okay. So we are going to solve this question. Mr. X retired from services of Y Limited on 31st of January 2025, meaning in the current previous year, he is leaving the job, retiring. So till the date of his retirement, he is going to get basic, allowances, perquisites, whatever he'll be getting till 31st January for 10 months only. So once he will retire, he is going to get retirement benefits also. So what retirement benefits he is getting? They are saying that, see, he is retiring on 31st January after completing service of 30 years and 1 month. Meaning that he worked in this company for 30 years and 1 month and then he is retiring right now. And he joined this company on 1st April 1995. At that time his age was 30 years. So can I say 30 that time plus 30 more years, he is a senior citizen right now. So becoming a senior citizen and leaving in this year. Okay. Next one, received the following on his retirement. So gratuity he is receiving and covered by POGA also. He is receiving leave encashment 3,30,000. Okay. So this leave encashment is also received on his retirement. Then as per the scheme of the company, he was offered a car which was purchased on 30th of January 2022 by the company for rupees 5 lakhs. So this 5 lakh rupees was the actual cost of the car to the company. And the company bought this car in 2022. This car was offered to him, meaning this car was sold to him. When he was getting retired, no, so company told him at the time of retirement, you want to take this car from us, take this car from us. And the car was offered for 2 lakh, meaning this is sale of movable asset for 2 lakhs. So you'll have to first find out the value of this car, and then out of that value you will reduce 2 lakhs, and then you are going to get what? Then you are going to get perquisite value for transfer of movable asset. Yes or no? Now company depreciates the vehicle. Very good, very good. Company depreciates the vehicle at the rate of 15% on straight line method. I don't want to know that at what rate the company is depreciating the vehicle. To value this perquisite, motor car depreciation will be reduced at 20% WDV only for every completed year of use. So this information is deliberately given so that you take the depreciation at 10% on SLM. Getting my point? So while calculating salary, you will be valuing the perquisite. To value that perquisite, this depreciation rate and this method is not allowed. Only 20% WDV is allowed, and for every completed year of use. WDV basis. Hello, everyone. So ignore this information. This information is given to what? Confuse you. Okay. Next one. Then he is getting commuted pension also. After commuting 2/3 of his monthly pension. Company presented him a gift voucher. Company presented him a gift voucher worth 6,000. He is getting gift, meaning he is getting a perquisite. Gift voucher means gift in cash. No, gift in count. Voucher means gift in kind. And the gift in kind is amount more than 5,000. So we can either charge it fully taxable 6,000 or we can charge 1,000 also. What we will be doing? We will be charging only 6,000. Okay. Then we will write a note that alternatively 1,000 can also be charged. Next one. His colleagues. Okay. Colleagues gifted him. Now colleagues means employer gifting or others gifting. Others. So this is not employer. Now the employer is not giving you gift. So this gift cannot come in salary head. Therefore, this is not your income from salary, first of all. So who is gifting? Colleague. Colleague means persons other than employer. So whenever you get gift from persons other than employer, that goes in income from other sources. And under the head income from other sources, it will be taxable if it is a gift of specified movable asset. And by the way, this you don't know right now. You will come to know in IFRS chapter that only few movable assets gift you receive that will be taxable under the head IFRS. That is P for paintings, J for jewelry, D for drawing, A for artwork, A for archaeological collections, S for sculptures, and S for shares. P. J. Das. What did I say? P. J. Das. Paintings, jewelry, drawings, artwork, archaeological collections, sculptures, and shares. Any of these movable assets received by you as a gift, only then it will be taxable under the head IFRS. And their value should also be more than 50,000. This will go to IFRS, but IFRS will not allow this gift to enter. Why? Because number one, this is not a specified asset. This is a television, not a specified asset. And the second reason is the value is only 50,000, not more than 50,000. Getting my point? So two reasons. Because of that, it will not come in IFRS also. It will be ignored. Understanding? Salary, forget, because it is not coming from employer. It could have been taxed under IFRS, but it will not be taxed under IFRS also. Why? Because number one, it is not a specified asset. And number two, its value is also not more than 50,000. Got it? Sure, everyone? Now let's see. Following are the other particulars. He is receiving basic salary of 20,000 and 50% DA per month, meaning that 50% of this basic only he is getting as what? DA. Okay, so 50% will be 10,000 per month. Okay, for the period from 1st April 2024 to 31st January 2025. Now see, in the answer which the institute has solved in this answer, they have assumed that DA is not in terms. They have assumed because it is not given in the question that whether DA is in terms or not in terms. So while solving the answer, the institute has taken an assumption that it is DA not in terms. Hello sir, but we will not take that assumption. We will say that this DA is in terms. We will write down a note for this, that in the absence of any information regarding the DA, we have assumed that DA is in terms, and I will prove also that this DA should be in terms only. I will prove also. Okay. But see, institute is very smart. What institute does you know? Institute has made the solution by taking DA not in terms. But in the end, you will see they have also given a note that alternatively, if the DA was taken as in terms, then the answer would have been this much. Getting my point? Which we are anyways going to get because we are assuming what? DA in terms only. And here we have to take this DA as in terms only, because only then it will be logical answer. I will prove that why I am taking in terms. I will prove that. Okay. So what we are going to take DA as in terms. Okay. Next one. Received a pension of 5,000 per month from February to March after. They have written what? After. After means some monthly pension was promised. Out of that monthly pension, see above, you have commuted 2/3. After commuting 2/3, you are receiving 5,000. This means that your monthly pension was not fixed 5,000, it was fixed 15,000. Out of that 15,000, you commuted 2/3 and you received what? Lump sum. Now after commuting 2/3, how much remains? 1/3, no? 15,000 into 1/3 you will get 5,000 only. That 5,000 you are receiving after commutation. Okay? Meaning that your monthly pension was how much? It was 15,000. Entire monthly pension you commuted or only 2/3 commuted? Only 2/3 commuted and you got that lump sum of 3 lakh rupees. Getting my point? After commuting 2/3, This 1/3 which remains is 5,000 only, which you are going to receive for February and March. And fortunately, you did not receive 15,000 for a single month. The moment you got retired, no, on 31st January, on 1st February itself you commuted. See, on 1st February only you commuted. And from 1st February you are getting what? This 5,000, 5,000. Getting my point? Now pay attention. Compute is what? Gross total income. They are telling you to compute gross total income. Meaning that 5 heads, that will include salary also, that will include all other 4 heads. Clubbing also be done. Set of carry forward also to be done. Then there will be a total, that will be a gross total income. That you are supposed to calculate. Now you are supposed to calculate, assuming that he exercises the option to shift out. Shift out of default tax scheme means, is he following 115 BSE or he is not following 115 BSE? He is not following 115 BSE. Okay. So first things first. Come on, tell me. First things first, huh? Pay attention, everyone. See, first of all, I will make a small timeline so that you understand what things are going on. This is my previous year. Okay, no? So in my previous year, starting from 1st of April 2024 till 31st of January, till 31st of January 2025, he was working. So first beginning of the previous year, what he is getting from the employer? Come on, tell me. When he was in employment, beginning of the year, what he was getting? He was getting basic and he was getting DA. How much basic he was getting? Come on, tell me. He was getting a basic of 20,000. 20,000 he would have received for how many months? 10 months. So 20,000 into 10, 2 lakh rupees of basic in this year will be taxable as this year's salary. So you will make a statement. Computation of gross total income of Mr. X for the assessment year 25-26. He is receiving a basic salary of 20,000 into 10, amounting to 2 lakh rupees. Taxable. Any problem here? So you will make a salary statement. In that salary statement, you will write basic salary. In the bracket, 20,000 per month into 10 months, 2 lakh rupees, outer column taxable. Done, everyone? Next one. He is receiving DA also. How much DA? 50% of basic. So how much was basic? 2 lakh. 2 lakh, 50% of that 2 lakh will be 1 lakh. That 1 lakh will be DA. Now wait. 50% of basic salary is DA and note. In the note, we will write that this is DA in terms. And why we have assumed in terms, I will tell you. Okay. This is DA in terms. Please remember. This is DA in terms. And DA in terms or not in terms, it is always taxable. Yes or no? Okay. Now tell me. On retirement, he is getting gratuity also. He is getting gift also. He is getting perquisite also. Whatever he was supposed to receive till retirement, he has received. Till retirement, he was supposed to receive basic. We have already taxed. Till retirement, he was supposed to receive what? DA. We have taxed that. Now he is getting retired on 31st of January. He is retiring on 31st of January. So on 31st January, what all things he is getting on 31st January? Number one, he is getting a gift voucher of rupees 6,000 from the employer. Please check. That 6,000 gift voucher is a perquisite. So first we are charging what? First we are charging basic, then DA, then we are charging perquisites now. So out of the perquisites, one perquisite is receiving gift. Gift in cash or gift in kind? Gift in kind. Gift voucher, gift in kind. The value is more than 5,000. Entire 6,000 will be taxable. So see, we have entirely taxed this 6,000. Okay. And here we will write a note. What? That alternatively, since the amount of gift in kind is more than 5,000, we have taxed the gift entirely. Alternatively, the excess amount can also be taxed. Understanding? Now, second thing, he is getting a car also. Car is transferred to him on his retirement only, but that is a perquisite for him, no? That is not a retirement benefit, that is a perquisite, but that perquisite is given at the time of retirement. Understanding? So what was the actual cost of the car? Come on. Actual cost of the car was 5 lakhs. Please check. Actual cost was 5 lakh. Adjustment number 3. Okay. I have already completed adjustment number 5. Now I am on adjustment number 3. They are saying that cost of the car was 5 lakhs. This car was purchased by the employer on what date? 30th November 22. Now please pay attention. 30th November 22 to 30th November 23. 1 year of use. 30th January. 30th January 22 to 30th January 23. 1 year of use. Then 30th January 24. 2 years of use. 30th January 25. 3 years of use. And then on 31st January 25 he is retiring. And on that 31st January 25 he is given this car. So can I say after using for full 3 years and on the immediately next day the car is given to him for rupees 2 lakhs. So for 3 years the wear and tear will be reduced at what rate? 20% WDV basis. So 1,80,000 and 64,000 will be depreciation, wear and tear for these 3 years. And if you reduce this out of 5 lakhs, you will get 2,56,000. And that 2,56,000 worth of car you are getting on your retirement for only 2 lakhs. So on retirement you are getting a perquisite of 56,000. Got it? So that 56,000 we are going to tax over here. And how did we get this 56,000? Please check this note. Purchase price 5 lakh. Depreciation first year 1 lakh. WDV 4 lakh. Depreciation second year 80,000. WDV 3 lakh 20. Depreciation for the third year 64. WDV as on 29 January 25. Okay. From 30th January to 29th January 1 year will be completed. And again from 30th January second year will start. Getting my point? So on 29th January 2025 the WDV was this much. And this car was given to you on 31st January 2025 for rupees 2 lakh. So this was the value. 2 lakh was there. 56,000 will be the perquisite value. And this 56,000 will be taxable. Okay. Now please pay attention what they have written. The rate of 15% as well as the straight line method adopted by the company for depreciation of vehicle is not relevant for calculation of perquisite value of the car in the hands of Mr. X. Hence the same is ignored. Getting my point? Hence the same is ignored. Done? Now please pay attention. We'll go to the next part. Gift voucher done. Now the transfer of car is also done. Now on retirement he is getting gratuity also. Is he covered by POGA? Yes. A non-government employee receiving gratuity. Hello. And he is covered by POGA also. Will his gratuity be exempt? The answer is yes. Under which section? 1010. How much? A. Actual amount of gratuity, which is nothing but 6 lakh. B. Maximum 20 lakh. Gratuity limit is 20 lakhs. And C. 15 by 26 into last drawn salary per month into number of years of service. So 15 by 26. Now I will have to check last drawn salary. So forget about the month of retirement. January forget. Immediately prior to that month, the salary I have to take. That is last drawn salary. So the month immediately preceding to the month of retirement was it was December. So in that month, what was the basic? It was 20,000 only. And what was the DA? It was 10,000 only. DA in terms also I will have to take. DA not in terms also I have to take. Because the employee is covered by POGA. So if the employee is covered by POGA, I take basic and DA both, na? Whether that DA is in terms or whether that DA is not in terms will not make any difference. So DA was 10,000 and basic was 20,000. So 20 plus 10 will give you 30,000. Last drawn salary you got. And now number of years of service was 30 years and 1 month. Ignore 1 month, will take only 30 years. So 15 by 26 into 30,000 into 30 years. Do the calculation, come on fast. So 30,000 into 15 divided by 26 into 30 years will give you 5,19,230. So 6 lakh or 20 lakh or 5,19,230, whichever is lower. 5,19,230, this will be exempt. Out of 6 lakh, we'll take this exemption. So out of 6 lakh, if we take this exemption, 80,770 will be our taxable gratuity. 1 rupee rounding off. 1 rupee rounding off I have done. But they have taken what? 80,769. You take 80,769 or you take 80,770. One and the same thing. 1 rupee rounding off we have done because of that point answers. Okay. Hello, sir. So 80,770. Are you all getting this? So how this was calculated? See, a note is given. Gratuity received 6 lakh. Exemption under section 1010 will be list of the following. This is notified limit 20 lakh. Actual gratuity 6 lakh. 15 by 26 into last on salary for 30 years will be 5 lakh 19,231. This 5 lakh 19,231 being the lowest of three amounts will be exempt out of 6 lakh. 80,769 will be exempt. Hello. Got it? Now pay attention. Gratuity is done. So this point number 1 is done. Now second point, pension we will be doing. Pension. Okay. How much is the uncommuted pension? Come on, tell me. 15,000 pension was promised to you per month. But are you ready to take that 15,000? No. You told your employer that, see, I am retiring on 31st January. You are telling me that you are going to give me how much? 15,000 per month pension. I don't want this 15,000. I want to commute 2/3, and instead of that, give me some lump sum. So after commuting 2/3, 1/3 still you are receiving, no? For February and March. That was 5,000. Hello. That was 5,000, which was 1/3 after commuting. That is the reason why I came to know that before commuting, the monthly pension was fixed 15,000. Reverse calculation. Getting my point? So, out of 15,000 monthly pension, 2/3 commuted for a lump sum and 1/3 you are still receiving after commuting is 5,000 per month. 5,000 into 2, February and March. That will give you uncommuted pension. 10,000 fully taxable. Hello, sir. So 10,000 uncommuted pension we will charge here. 10,000 uncommuted pension. See, taxable. Okay. Now, is he receiving commuted pension also? Employee is a non-government employee receiving what? Commuted pension of rupees 3 lakhs. Yes or no? This part. Fourth one. He is getting a commuted pension of 3 lakhs. Full monthly pension commuted or only 2/3 commuted? So from this, can you calculate fully commuted pension? Yes, if 2/3 is commuted and 3 lakh is received, what if the 3/3 meaning full was commuted? Cross multiplication. If 2/3 was commuted and you are getting what? 3 lakhs. What if the full meaning that 3/3 was commuted? How much pension you would have received? Can I say 4,50,000? 2/3 will be divided. 3 lakh into 3 by 3 divided by 2 by 3. 3 will come upside. So 3 lakh into 3 will become 9 lakh divided by 2 will be 4,50,000. That is a basic math, huh? Basic maths. You have to learn this. Okay. So 4,50,000 was fully commuted pension. If he would have commuted full amount of pension, he would have received how much? 4,50,000. But is he receiving full pension? No, he is receiving only 2/3 and receiving how much? 3 lakh. So can I say 3 lakh is the amount of pension which he is receiving? It is 3 lakh is income. Out of this 3 lakh, he will get exemption under section 1010A. Exemption will be either the actual amount 3 lakh or maximum 1/3 of fully commuted pension. Hello. Why 1/3, sir? Because he is also receiving gratuity on retirement. See. So the non-government employee also receiving gratuity on retirement, for him, the commuted pension can be exempted to the extent of maximum what? 1/3 only, no? 1/3 of what? Fully commuted pension, which you have already calculated now. So I will do 1/3 of this. So that will give you 1,50,000. Now tell me one thing. 1,50,000 is the maximum limit or the 3 lakh which you are actually receiving, whichever is lower. 1,50,000 will be exempted. So out of the 3 lakh which you are receiving, 1,50,000 is exempt. So how much will be taxable? Commuted pension taxable will be 1,50,000. Please check. See, 1,50,000 commuted pension taxable. Now whatever catch is there, no, the catch is here. Please pay attention. This is very important discussion which I am going to do now. Leave encashment. See here how much answer institute is getting? 1,30,000. But we will be getting only 30,000 taxable. We will be getting only 30,000. Institute is getting 1,30,000. And in the note below, the institute is saying even if you are getting 30,000 taxable leave encashment, no, still your answer is correct. Because in that case, you would have assumed that DA is in terms, then your leave salary taxable will be 30,000 and not 1,30,000. Then accordingly, your salary and everything will change. Hello, sir. So we will do that calculation. Please pay attention. Please pay here. See, leave encashment. This encashment is for 330 days leave balance. And this was calculated on the basis of 30 days leave entitlement. No, 30 days was there, no? Yes. 30 days leaves allowed by employer. Wait, everyone, please pay attention over here. Employer was giving you every year 30 days leave. It is given in the question. On the basis of 30 days, for 30 years, you would have received how much? 900 days leave. Hello. Out of that 900 days leave, which was allowed in 30 years, you took few leaves, and whatever leave remains in your balance, this is leave credit. Can I say this leave credit is nothing but 11 months leave credit? 330 divided by 30 will be 11 months leave credit. So this 11 months leave credit is calculated on the basis of 30 days leave allowed by the employer. Hello? How much is the maximum leave allowed as per income tax rules? That is also 30, no? So if as per income tax rules, we would have calculated leave credit, even that leave credit would have been 11 months only. Hello? Your employer is saying that take 30 days leave for every year. Employer is giving 30 days leave for every year. How many years of service you have given? 30 years of service you have given. So in 30 years, you would have got 900 days leave, no? Out of that, some leaves you have already taken. And then 330 days leave remaining. Again divide by 30, you will get what? 11 months. This your employer was giving. So how much leave you would have taken? Out of 900, how much leaves you would have taken to get 330 days balance? Balancing figure. So 900 minus 330, meaning that you would have taken 570 days leave. This was a balancing figure. Hello. This balancing figure is nothing but the leave taken by you during these 30 years. Leave allowed was 900. Out of that you took 570. Then remains what? 330 days. And if you divide by 30, you will get what? 11 months leave credit. This 11 months leave credit is calculated on the basis of leave allowed by employer, which was 30 days only, no? If you calculate the same as per IT rules, so here IT rules also says that maximum 30 into 30 is equal to 900 minus 570 is equal to 330. Hello, sir. Divided by 30, you will get 11 months. So as per IT rules also you are getting 11 months, no? Why both are coming same? Because for both, the leave allowed was 30-30. So no need to do two calculations. No, do one calculation only. As per employer's rule, whatever leave allowed was equal to IT rules. So as per employer's rule, whatever leave credit is there, that same leave credit will be as per IT rules also. So how much leave credit as per IT rules? 11 months. How much leave credit as per employer's rules? 11 months. 11 or 11, whichever is lower. 11. That leave credit of 11 months we will take for exemption. Yes or no? So now do you remember 4 limits? If the leave salary is received by an employee who is a non-government employee. If the leave salary is received by the employee who is a non-government employee. How much leave salary he is getting? Come on, tell me. Leave salary on retirement was 3,30,000. Out of that, he will get exemption under section 1010 AA. How much exemption he will get? A. Actual amount received. Actual amount, no. That is 3,30,000. B is what? Maximum limit available for exemption. That is 25 lakhs. Do you remember for leave salary the maximum limit was 25 lakhs? And what is limit C? 3 months salary. No, 10 months salary. 10 months salary. But for that I will have to first calculate average salary, and that then average salary multiplied by 10, I will get what? 10 months salary. And then limit D, I will have to calculate leave credit multiplied by average salary. Leave credit I have calculated that it will be 11 months. Here I have to take 10 months, but I don't have average salary amount. Now average salary I will calculate. And here only the catch is there. In this average salary, I have to take what? Basic, DA in terms, turnover commission of 10 months, including the month of retirement. Hello? So my month of retirement was January. So including January also, and earlier 9 months also, I will take basic of all these 10 months. I will take DA in terms for all these 10 months. I will take turnover commission of all these 10 months. Basic was including January and earlier 9 months. The basic was 2020 every month. So basic will be how much? Come on, tell me. Basic will be 20,000 into 10 is equal to 2 lakhs. Yes or no? Now I will have to add what? DA in terms. Now what was the DA? 10,000. But they are assuming that the DA is not in terms. So they are not taking this DA here. But we are assuming that DA is in terms. So we are going to take that DA over here. Hello, sir. So DA was how much? 10,000. 50% of basic into 10, which will be 1 lakh rupees. Now what was the turnover commission? We read the entire question. Was there any turnover commission? The answer is no. There was no turnover commission. So do I have the 10 month salary now? It was 3 lakh rupees. Now 3 lakh divided by 10, I will get 30,000 per month as what? Average salary. And they would have got average salary of 20,000 only. Because as per them, DA is not in terms. But as per my understanding, it is DA in terms. So I have taken that DA also. So accordingly, my average salary is 30,000. Now pay attention. Do you have average salary now? Do you have this average salary? Average salary I will put here, 30,000. And average salary I will put here also. So this will be 3 lakhs. And this will be 3,30,000. Everyone got this? A, B, C, D. Whichever is lower. So I will get this 3 lakh as what? Exempt. So out of 3,30,000, I will exempt what? 3 lakh. My taxable leave salary will be how much? 30,000. Did you all know this? 30,000. So in my solution, if I come, will I write 1,30,000 here? Or I will write only 30? I will write only 30. This is the only amount which is different for me and for my institute. So if this 30,000 I am taking, so then this salary which is there, no, this will be reduced by 1 lakh. I am not taking 1,30,000 as taxable. I am taking only 30,000 as taxable. So my salary will reduce by 1 lakh. So it will be 6,32,769. Out of that I will get 50,000 standard deduction. Okay. And I will get 5,82,729. This will be my final answer. Got it? whereas the institute is getting how much? 1 lakh more. Now 1 minute, 1 minute. Everyone should focus now. If I ask you one thing, you are getting leave salary on your retirement. So can I say leave salary which you are getting is a retirement benefit? Now 2 minutes, forget this thing. DA we discussed. Do you remember DA? Two types of DA. The DA which is written in terms of your contract will form part of salary to calculate your retirement benefits. Remember? DA which is not written in terms of contract will not form part of salary to calculate your retirement benefits. So leave salary is your retirement benefit, no? Leave salary is your retirement benefit. How much leave salary you are getting? 3 lakh 30. How much leave salary you are getting? 3 lakh 30. That 3 lakh 30 you are receiving for how many months? 11 months? 330 divide by 11, you will get 30,000. Meaning that your employer has given you retirement benefit of 3 lakh 30 based on 30,000 salary. And that 30,000 includes basic and DA. Why he is going to include that DA? Because he is definitely going to cover that DA in the contract. Hello? If the DA was written in contract, that is the reason why DA, basic both are taken. 30,000 multiplied by 11. You are getting that 3 lakh 30. This is a pure indication that the DA is in terms. Getting my point? You ask this to anyone, they will not be knowing all these things. Institute has done what? See, 20,000 they have taken. And then later on they came to know that it is a blunder. What they are doing? They are not applying this much mind also. See, if the employer is giving leave salary, which is what? Which is a retirement benefit. To calculate the retirement benefit, leave salary for 11 months, they have taken a salary of 30,000. So salary 30,000 based on the 30,000 salary, 11 months benefit, 3 lakh 30,000 is given. So if salary 30,000 is taken, in that 20,000 basic is also taken and 10,000 DA is also taken, no? So 10,000 DA taken, 10,000 DA forming part of salary to calculate your retirement benefit. That DA has to be DA in terms. That goes without saying. No need to do any assumption also. Getting my point? So in your notebooks, write down this paragraph or somewhere near this question, write down the paragraph which I am dictating right now. Please write down. In the given question, since the leave salary amounting to rupees 3 lakh 30,000 which was given for 11 months leave credit amounting to 3 lakh 30,000 which was given for 11 months of leave credit is computed based on 30,000 per month salary, in the bracket write down 20,000 basic plus 10,000 DA. Full stop, close the bracket, full stop. Hence, it is a clear indication that the DA was given in terms of contract. It is a clear indication that the DA was given in terms of contract, forming part of salary to compute the retirement benefits, forming part of salary to compute the retirement benefits. Hence, no need to assume that it is not in terms. No need to assume that it is not in terms, comma, it is clearly DA in terms. Full stop. Done? Sure? Okay. Now see what the institute has done. On your page number 3.92 now, they have made the calculations. They have taken only 20,000. Can you see? And they are saying that DA not in terms we are assuming. And in the note, they are saying alternatively, the DA can be assumed as in terms, and in that case, the gross total income will be 6,32,769, which we have already calculated. Hello, sir. Done now? Sure. So this was the question. Now see, in this question, no, you have right now calculated what? This amount which you have calculated is your taxable salary after taking standard deduction. But since you did not have any other heads of income, so other heads of income will be nil. No clubbing, no set off. So salary, this much amount. After taking standard deduction, this much amount. Other heads, nil. No clubbing, no set off. So total will be the same, which is your salary income. That only will become your gross total income, which they are telling you to calculate. Understanding? Shall I move ahead? How was this question? Interesting, no? Mark this question important. Before exam, you have to compulsory see this question because this includes many things. Perquisites, few perquisites are also covered. Retirement benefits are also covered. Okay. So we are moving on to the next question now. I guess we have done question number 21 or not? Not done? 21 is not done, no? Come on. We'll start with question number 21. But wait, wait. This question, no, I would like all of you to try at home. This will be your homework for today. Simple. All the perquisites are given. Details of perquisites are given. You have to remember, recollect the perquisites which we have studied in the class. And accordingly, you will have to say that how much out of this is this perquisite taxable or not. If taxable, then how much. Now take the total of all the taxable perquisites. You will get total taxable perquisites, which is to be calculated in this question. If you want, I can discuss it right now. But then you will not try. I want all of you to try it first today. And tomorrow I will discuss this question. Okay. So this one question is for you as a homework today. Let's move on to next question. ESOPs. We have already done this question, no? ESOPs 22. Then 23 also take as homework. Because in 23 also there are perquisites. Okay. Taxability of the perquisite is to be determined. Okay. 23 also take as homework for today. So two questions I have given for homework, 21 and 23. Please remind me in tomorrow's lecture that you have done this. And I will discuss the answers tomorrow. But you have to religiously solve these two questions at home today. Okay. Then 23 is done, no? Now 24, leave it right now. 25 also leave it right now. Now we are coming to test your knowledge part. Test your knowledge. In test your knowledge, question number 1, Mr. Mohit, we have already done. That question was related to HRA. This question already we have done. Yes or no? Question number 1. Question number 2, medical facility we are going to do after medical facility. Come to question number 3. and mark this question also as your homework. So whatever homeworks I'm going to give you today, no, all those questions, only perquisites are there. You have to remember the perquisites which we have done, and based on, you have to check the answers. Okay, 3 questions, 22, sorry, 21, 23, and this question number 3. Now let's come to question number 7. We are going to do this question together. Question number 7. Now in this question, no friends, they are not telling you to calculate the taxable value of perquisite. They are telling you to calculate what? Taxable salary. But while calculating taxable salary, many perquisites will also be given. Okay. Many other benefits will also be given. So all these things we are going to do. But wait, in this question, no, there is one health insurance premium which is given. Okay. No problem. We are going to solve this question. Question number 7. Shall I start? Okay. Pay attention. Do the markings, huh? Miss Akanksha, a salaried employee, furnishes the following details for the financial year 24-25. So Akanksha happens to be my sister, my younger sister. Her name is Akanksha. Till this question came to me, I was not aware that she is already employed somewhere. I came to know from this question that she has got a job. Okay, I will have to congratulate her, because ICI study mate is telling me that my sister has got a job. Wow, wonderful. So I'm very happy for her. But equally sad also that she did not tell me. But wait, she is earning a basic salary of 6,20,000. My God. She is richer than me. 6,20,000 basic salary. DA also she is getting. 4,20,000 DA. My goodness. Commission also she is getting. 75,000. Entertainment allowance of 9,000 she is getting. This time she is not going to get anything from me in Raksha Bandhan. 100% I'm not going to give her anything because she is richer as compared to me. Oh my God. Oh yeah. So what we are going to do, for my sister Akanksha, you are supposed to tell me that her basic salary is taxable for her or not taxable for her. Taxable, no? So write down T for taxable. Write down it is T for taxable. So whatever statement of salary we will prepare, in that statement of salary, the computation of taxable salary for Akanksha will be there. Okay. The first income will be basic salary, 6,20,000 taxable. Everyone. But wait, no. In the last part, you will see that they are mentioning you that she pays tax under default tax regime. What, friends? She pays tax under default tax regime, meaning that 115 BAC she is following. Can you do me a simple small favor? Today, after solving this question at home, assume that 115 BAC is not followed, and then see what are the changes. But right now we are solving as if she is following what? 115 BAC. So under the default tax regime, she is calculating her salary income. So salary income, basic salary will be taxable, no? Whether 115 BAC followed or not followed will not make any difference. Wherever the difference will come, that time we are supposed to be, alert. Okay. Basic salary T for taxable. Dearness allowance T for taxable. Okay. Now this time, no? This time we can assume in terms also, not in terms also. We will see later on if there is any hint, then based on that hint we can consider that in terms. But if no hint is given, so we have full authority to take it in terms as well as not in terms. Sure? Let's see later on. But whether it is in terms or not in terms, it is going to be taxable only. Next one, commission. Commission will also be taxable. She is getting an entertainment allowance, 9,000, that will be taxable. But wait, for the entertainment allowance, the deduction under section 16 clause 2 is usually available. But it is available to which employees? Government employees. Is she a government employee? See, she is a salaried employee, and nowhere it is mentioned that she is the employee of a government, meaning that she is a private employee. So for private employees, no sir, 16 clause 2 deduction is not available. But sir, if it is not given and if we assume that she was a government employee, then also she is not going to get. Why? Because she is following 115 BSc. Under 115 BSc, she is not going to get any deduction other than standard deduction. So 16 clause 2, even if she was a government employee, was not available to her. Understanding? But wait. At your home, you will do the same calculations, assuming that she is shifting out from 115 BSc, not following 115 BSc. That time also you are not supposed to take it. Why? Because she is not a government employee. Getting my point? Okay, next one. Medical expenses reimbursed by the employer. See, whenever the employer reimburses the medical expenses, no, that is a perquisite. That is a medical facility which I am going to explain you tomorrow. But right now, please remember only one thing. Whenever the employer will reimburse the medical facility bills for treatment done in India, and that treatment was done in government hospital, recognized hospital or employer's hospital, then that benefit will be fully exempt. So treatment must be done in India, and that treatment must be done in government hospital, recognized hospital or employer's hospital. For that treatment, if the medical bills are reimbursed, medical facility is given, then that facility is fully exempt. Now tell me, are they telling you that the treatment was done outside India? No. That means the treatment would have been done in India only. But if the treatment is done in India, in government hospital, recognized hospital or employer hospital, they will definitely tell you. Are they telling you that the treatment was done in government hospital, recognized hospital, employer hospital? Meaning that now this medical facility will not be exempted. This will be fully taxable. So what we are going to do? We'll tax it as a perquisite. T for taxable. Okay. Next one. Professional tax of this 50% paid by the employer. Meaning that, see, 4,000 total professional tax is paid. 50% of that is paid by the employer. Meaning that, can I say 50% is how much? 2,000 rupees paid by the employer. And the professional tax, which is your professional tax on your behalf, it is paid by the employer. Don't you think 17 subsection 2 clause 4, your obligation met by employer, this is a perquisite for you? So first of all, this 2,000 will be T for taxable. T for taxable. Entire 4,000 is not taxable because entire 4,000 is not paid by the employer. Only 2,000 is paid by employer. That 2,000 will be taxable. Now, the 4,000 of professional tax which is paid in this year, 2,000 paid by the employer, 2,000 paid by you, 4,000 totally paid in this year, no, will be allowed as a deduction under section 16 clause 3 only if you are shifting out of 115 BSc. But are you in 115 BSc? Yes. So this will also not be allowed. Understanding? So only one effect has to be given. What effect? Only 2,000 will be taxable. That's it. So for that 4,000 which you are going to get as a deduction under 16 clause 3, that will not be available because you are following 115 BSc. Understanding? But at your home, when you will be solving this question, assuming that she is not following 115 BSc, then 2,000 will be taxable and you will take the deduction also under 16 clause 3 amounting to full 4,000. Getting my point? That time you will take 4,000. Understood? Next one. Health insurance premium paid by the employer. See, whenever the employer pays the health insurance premium, in the medical facility only I am going to explain this. Okay. If the health insurance premium paid to the insurance company for your health insurance policy, that is not a taxable perquisite, that is a fully exempt perquisite for you. Okay. So if the health insurance premium is paid by the employer, it must be paid for your health insurance policy only. Is it a taxable perquisite? No, it is a fully exempt perquisite, meaning that this 8,000 will not be taxable for her. This health insurance premium will not be taxable for her. Next one, gift voucher given by employer on her birthday. So whatever gift received at the time of marriage is not taxable, even if coming from the employer. But other than that, whenever the employer will give you the gift, that will be taxable for you, no? If given in cash, will be fully taxable. If given in kind, up to 5,000 not taxable. More than 5,000, two things can happen. Either fully taxable or excess can be taxable. So tell me, is it gift voucher? Yes, that means gift in kind. Amount is 10,000, which is more than 5,000. So entire 10,000 we will tax. And in the note we'll write alternatively excess 5,000 could have been taxed. Yes or no? But we will tax how much? Entire 10,000. Next one, life insurance premium of Akanksha paid by the employer. Do you remember 17 subsection 2 clause 5? Any life insurance policy premium or annuity policy premium of the employee paid by the employer is also a perquisite taxable fully. So this will be a perquisite under 17(2)(5) and this will be taxable. Yes or no? Next one, laptop provided for use at home. Now they are saying actual cost of laptop to the employer is 45,000 and children of the associate are also using the laptop at home. All these informations are given to confuse you. Whether it is provided to be used at home, whether it is provided to be used at, park, whether it is provided to be used at office, will not make any difference. Laptop given for use, computer given for use, the benefit will be fully exempt. Even if it is used at home, even if the children are also using it, will not make any difference. Yes or no? This benefit is fully exempt. So nothing will be taxable. This will be fully exempt perquisite. So the 45,000 cost of that laptop is given will not make any sense to me now. If the value of this perquisite would have been taxable, I would have to take 10% of the actual cost. Am I going to take the 10% of actual cost? No. Benefit is fully exempt. So ignore the cost also. Getting my point? Everyone? Next one. Employer company owns a Maruti Suzuki Swift car which was provided to the assessee both for official and personal use. 1 minute. Employer company owns a car. Car belongs to employer. 2. Car belongs to employer. The use was official and personal. POPP. Partly official, partly personal. And the driver was also provided. Hello. And all expenses are met by the employer. Now tell me, car belongs to employer. You will use benefit will happen. Expenses are also made by employer. Expenses benefit will also happen. Two benefits. Now this expenses will also include driver's salary because it is also paid by the employer. Yes or no? Two benefits. If any amount recovered, you reduce. Whatever balance will remain will be fully exempt if the car is fully official. Whatever balance remains, that will be fully taxable if the car is fully personal. No need to calculate this. If the car is partly official, partly personal, a flat amount will be taxed based on the engine capacity of the car. Either 1,800 per month or 2,400 per month. Include 900 extra if the driver was also provided. Partly official, partly personal, flat amount will be taxable. Driver was also provided. Hello? Then 1,800 as well as 2,400 both can be taxed. What I will tax? I will tax 2,400 because the engine capacity of the car is more than 1.6 liters, means more than 1,600 cc. Getting my point? So how much I will tax? I will tax 2,400. Yes or no? Plus I will do 900 also. I will add 900 also. This is my per month amount. Multiplied by how many months the car was given? Nothing mentioned. I will assume that it is given for the full year. So the amount will be 3,300 into 12. This will be 39,600. And guys, this 39,600 will be taxable value of perquisite. See, this kind of questions they ask in the exam. Trust me, same question came in the exam few years back. 10 marks. And 10 marks, how easily you can get? Provided you recollect everything on time and you don't commit silly errors. Okay. Now in the same question, no, I can twist. All the expenses of the car were met by employee. So instead of 2,400, I would have taken 900 per month, and 900 also for driver, because now car belongs to employer, expenses met by employee. So it is 2A. C? No, it is 2B C. Two benefits? No, only one benefit. Use benefit. Expense benefit not happening. So higher amount 1800, 2400 will be taxable. No, lower amount 600, 900 will be taxable. And plus also 900 if the driver is also provided. And engine capacity was more than 1600, so I will tax 900 in that case. Understanding, no? Small information they will change, and the entire answer will also change. You have to be very careful while reading the question. Okay, next one. Annual credit card fee is paid by the employer. Do you remember credit card facility? So your credit card annual fees is how much? 7,000, that is paid by the employer. And the credit card is not exclusively used for official purpose. Details of the usage are not available. Meaning that out of this, how much is official, how much is personal is not given. We will assume that entire belongs to personal. Hello? So entire amount of credit card payment made by the employer is your perquisite, will be fully taxable for you. Now, do you have all the taxable amounts? Take your calculator. Take your calculator. On the calculator, take 6,20,000 basic salary. Now take 4,20,000, add 4,20,000. So 6,20,000 plus 4,20,000, add 75,000 also. Add 9,000 also. Add 18,000 also. Don't add 4,000, add 2,000 only. Professional tax paid by the employer. Yes or no? Add 2,000 now. Now don't add 8,000, but you will have to add 10,000. You will have to add 26,000. No need to do anything with 45,000. Now you will have to add 39,600, and last you will have to add 7,000. On your calculator, you are going to get 12,26,600. Are you getting that amount? That 12,26,600, my dear friends, is your gross taxable salary. Out of that gross taxable salary, you are going to get 3 deduction. No, only one, because you are following 115 BSc. What deduction is that? Standard deduction. And 115 BSc standard deduction will be 75,000. Take that standard deduction of 75,000 and now check 11,51,600. That is your net taxable salary. They are telling you to compute income chargeable under the head salary, and this is the income chargeable under the head salary. Got it, everyone? In your textbook, in your solutions, please check the final answer. If the final answer is this much, please check. I will show you. $11,51,600. Did you all get this? Now you just have to present the answer. That's it. Will you be able to do it? And one more way you are going to do. If not following 115 BSc, shifting out, then where are the changes? I have already explained. Tomorrow you are going to give me that answer also. So 7th question we have done. Tomorrow we are going to finish this chapter, because only medical facility is remaining, LT is remaining, and PF, ASF, and few questions. That's it. We are going to end this tomorrow only. Okay. So we'll meet tomorrow, same time. Okay. Till then, bye bye.